in the coming quarters?
I think more likely than not it will be, and that's just based on the history of what we've seen in cycle after cycle. It would be great for the Fed, it would be great for the economy if you just had this wonderful Nirvana-like scenario where everything kind of slowed on the same schedule. If we had a different inflation print last week, we'd be having a very different conversation now, and I think that just shows the extent to which this market is focused on the very recent data. So we had softer inflation print, we have jobless claims that are coming up a little bit. That looks like something that could be consistent with a soft landing. But are you going to get some data that starts going in different directions? Probably, and this is probably going to become a lot more difficult for the Fed.
But just to build on that, is there an inherent conflict in your belief of a growing chance of a hard landing, of a recession, but also sticky inflation?
Yeah, so I think that's the real difficulty, and that's what we haven't seen really in decades, where you have inflation that's still running above target, and you have growth that's weakening. Now, maybe they're going to happen together. Maybe they happen together in kind of just the right quantum so that you get the soft landing. I think it's a possibility, but the more likely scenario is that we'll have these kind of going in different directions where inflation probably stays stickier and higher. One issue with inflation and the way that the Fed is conducting its policy is inflation is going to lag what's going on in the rest of the economy. So even if the economy starts slowing down, job market starts loosening, you'll still be running inflation that reflects where the economy was 6 months ago or a year ago, and 6 months or a year ago is very strong.
So are you saying that the Fed won't be cutting rates as much as people think next year because they won't be able to justify it given where inflation is?
Yeah, I think that's really the risk here, and that could happen a couple ways. So you could have this scenario where the activity data is weakening, but you still have inflation that's sticky and high. On the other hand, even if we're on something that ends up looking more like a soft landing trajectory eventually, there wouldn't be a lot of urgency for the Fed to cut rates in that scenario. I know theoretically if inflation comes down, and I agree at some point the Fed would be cutting rates, that could take a very long time before we would actually get those Fed cuts.
I need to ask you about the linkage from your UCLA and the giant almanac over to William Sharpe, who was a student up at Stanford eventually, to you, which is the risk-free rate. You absolutely nailed the increase in rates. Do you have any clue where the risk-free rate is in 12 months?
Yeah, like we were just discussing, it's going to depend on the economic scenario, and I think you have to be open to economic scenarios here. We do know that we're in a world where inflation has been higher, has been more volatile. We know that the correlation between equities and fixed income has flipped. Essentially, you have equity prices that are falling at the same time bond prices are falling. That means there'll probably be some more term premium in there. That means you'll probably have a higher interest rate, all else equal. So if anything, that risk-free rate is probably going to be higher.
Andrew, what changed? What changed? What changed about the fundamentals of things that's going to lead to this different outcome now relative to pre-pandemic?
I think the single biggest thing you can point to is what's different in goods inflation, and I think that's what we're all not looking at enough right now, because we've had a big disinflation in goods. So I think it's easy to kind of look at that and say, well, we've kind of returned to this pre-pandemic goods deflation. And that's what we had pre-pandemic. Goods prices went down over time. And I think anyone who's been out buying things over the last couple of years, certainly the experience is not that goods prices are down. Now, some of that was specific to the pandemic, some of that's not going to continue. But what will continue is this kind of topping out of globalization, maybe going the opposite way in terms of globalization. And that means that stream of low-cost goods is just not going to be there in the same way that it was, putting downward pressure on goods prices. So I think we can expect goods inflation going forward.
So this is a secular call for you. It's not a call about the cycle.
So that's a secular call. Yeah, I think that we're in the idea that inflation now is higher, more volatile, that the economy is more subject to supply shocks than demand shocks. These are structural secular changes.
Andrew, great to get your perspective on things. Thank you, buddy. It's good to see you.
Thank you. Great to see you.
Andrew Honhorst of Citi, TK, potentially seeing the dual mandate of this Federal Reserve in conflict going into a new year, whereby growth gets weaker, unemployment maybe climbs a little bit higher. You see that in jobless claims at the moment, and inflation remains sticky in and around 3%.
He's auditioning for governor of the Fed. The answer is he's migrating from 2.0% back up to something new out there somewhere. I mean, it's as simple as that. Is there a new regime out there?
But it raises this question, you're correct. At what point
Thank
does the
God.
Fed not really cut rates as much as people expect because inflation won't justify it, right? And this is really the key question. Are they necessarily de facto going to be so late to the party to necessitate some sort of bigger downturn and a more
There
stagflationary
we
type
go.
feel
That's a glue.
for at least a bunch of months in the next couple of years?
That wasn't that gloomy, was it?
No, it's edge of gloom.
On the edge of gloom.
No, it's edge of
Okay,
gloom.
just a
On the
sprinkle of
edge of
gloom. There was
realism.
sprinkle of gloom.
Sprinkles.
Sprinkle of gloom.
For the holiday season.
Yeah,
That's
why
what
not?
we do.
Just a sprinkle of gloom.
John, the Bulls are publishing this morning, Stolfus out with a very nice note. And of course, he's always modest and never taking a massive victory lap. But he says, we're going up not on stimulus and not on public policy. Granted, as Dr. Hollenhorst mentions, the damage is done.
On a
in
profit
terms
recovery.
Of debt and deficit. But we're going up because we're going up. That's a John Stolfus
Oh,
take,
just because we're going
4,600.
up. Okay. That
What about
explains it.
Yardeni out at 5,400?
I know. Looking for a big year next year, maybe, Tom. Coming up, Anna Ashton of Eurasia Group on China. That conversation just around the corner from New York City. Equity futures on the S&P 500 just about positive. Yields higher by 3 basis points. 4.47 on a US 10-year.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We're, likely at or near the peak of where we need to be in terms of having a sufficiently restrictive stance of monetary policy that will sustainably bring inflation down to 2%. And I think the recent economic readings reinforce my view that that is probably correct.
We've heard that many times over the last few weeks. That was Michael Barr, the Federal Reserve Vice Chair for Supervision, speaking to Bloomberg's Joe Weisenthal and Tracy Alloway at an Odd Lots event here in New York City. Here in New York, welcome to a new trading week. Your equity market looks like this on the S&P 500, just about positive, 0.04%. Yields a little higher by 3 basis points, 4.4686 on a US 10-year. In the FX market, the dollar weaker once again, and all of last week as well. 109.23 on the euro against the dollar. We're positive here, Tom, by 0.07%.
Chinese yuan comes in as well, stronger renminbi. There's just no question about it. 7.17 is a good thing. To have the renminbi go under 7 would be a huge, huge plus for all involved.
Can China turn it around next year?
That's a huge mystery.
Pretty disappointing year,
that's
2023.
Yes, I think, and it really has to do with medicine. I mean, the idea of COVID and what many critics in the West would say, the arrogance of thinking you solve COVID by constraint and sequester, just really didn't work.
And Tom, we had this revenge spend of the consumer in the Western America, in Europe.
Yeah.
Couldn't wait to get back out, spend money. Confidence of the Chinese consumer shattered absolutely shattered, Tom.
And again, this is, somebody brought it up late last week. I'm so sorry I can't remember, but the basic idea of the hope and prayer of a building consumer, not out to 70% of GDP like here, but something that moves beyond a totalitarian regime out to a free, open consumer has once again been postponed.
Heartwarming changes for the business environment coming to a China near you. Did you hear that last week?
I didn't know.
I actually didn't. No, I didn't, which was actually interesting.
He told us they would come.
Okay, but was it heartwarming?
I'm not sure how heartwarming it was for you. How difficult is it to warm?
We got to tie
Bramo's
this
heart?
in. I mean, at the dinner in San Francisco, was Sam Altman at the dinner in San Francisco?
I don't know that. I don't know the answer to that question.
go full
I did
circle
get
on
someone
that.
writing in a minute ago who said The Edge of Gloom sounds like Bramo's solo album.
It's beautiful.
It's good, you know. She got Bon Jovi singing backups on that.
Nice.
Nice, this works out well. Right now on China, and particularly after the theater, on the statements of last week, Anna Ashton joins, really quite qualified at this Director of China Corporate Affairs, U.S.-China at Eurasia Group. And I want to get beyond the festivities last week to just simply the now what for Beijing. What is their next step?
Well, I think an interesting next step that isn't exactly directly related to U.S.-China is the fact that they're hosting Arab leaders right now to talk about how to bring the conflict over Gaza to an end. And I think underscoring their role as an emerging leader in moderating international disputes and trying to bring about peace. So that's interesting, certainly flexing muscle diplomatically. In terms of what's next for the U.S. and China, though, you know, this was an important meeting. It capped off a year of back and forth between the two sides, trying to set the stage for some progress in the relationship and certainly trying to stabilize the relationship. I think that there's a lot that's been accomplished here in that regard, the fentanyl deal being a particularly important one from the United States perspective. But at the end of the day, you know, both nations still fundamentally are distrustful of one another. The U.S. still fundamentally sees this as a competitive relationship. And we're heading into a 2024 where we know that there are going to be speed bumps. There's going to be the Taiwan election, which could trigger reactions from China that are militarily bellicose, and that then trigger reactions from the U.S. Congress and make it hard to maintain that stability. Then there's an inauguration in May of that leader who is elected in January in Taiwan. And then, of course, there's the U.S. election and all of the political rhetoric that comes with it in November. So, you know, it remains to be seen exactly how much progress has been made that is lasting.
Everyone was smiling for the cameras. That was the takeaway last week. Happy families. Anna, the thornier issues that you mentioned, the points of military tension in the Middle East, in Ukraine, were they addressed last week?
Not substantially, no. There certainly wasn't progress on those things, and we weren't expecting there to be progress. But I think that underscores the point, right? That this is a relationship that has been at its lowest place in 40 years, and there is a long way to go before this relationship becomes one where cooperation can deliver, really meaningful, tangible benefits from a global perspective. And it's not a sure thing that it will get there.
How much did the Chinese representatives, including Xi Jinping himself, reassure U.S. businesses that it was safe to come back?
That was a key message, and it was a key message when I was in China the last couple of weeks as well. It's very clear that there is a deep desire to reassure the foreign business community and attract foreign investment back to China. And there's, pretty clear economic reason for that, too. There's a lot that China would like to do to stimulate its economy that really kind of requires foreign investment right now, because the debt situation of local governments and the pressures that the central government are under, there's not a whole lot of room monetarily to deliver the kind of big stimulus packages and things that have been delivered in the past. And there's no certainty that a big stimulus would even work, since, the goal is to improve consumer confidence. And we have yet to see China deliver a stimulus package that's focused on putting money in consumers' pockets, right? So they really do want foreign direct investment back and they're trying to attract it. But at the same time, there are these regulatory and compliance concerns that the foreign business community has operating in China that haven't necessarily been assuaged.
Right, and that's sort of what I gathered last week was that essentially China was making a big pitch and companies were saying, I'm not really hearing anything that's going to make any difference. What really the takeaway may have been was just how much the leverage has shifted to the U.S. over China. How much does that accurately represent the situation economically, considering the fact that China does want foreign direct investment, which has gone negative for the first time ever in data going back to the 1990s?
Well, I think it's important to remember that there are other sources of foreign direct investment, and the U.S. is, of course, an important one. But China has other partners that they can turn to. So there is leverage here, but it is not it's not limitless leverage. And of course, to the extent that the U.S. is able to keep the EU and other major trading partners aligned with U.S. policy with regard to China and economic relations as well as tech sharing, then it matters more what the U.S. position is, because the U.S. position will influence those other trading partners. But, I think that China is looking at the U.S. political situation and sees lots of potential for things to shift come this time next year.
I think that's what we all see. Anna, thank you. Anna Ashton of Eurasia Group going into next year. Anna Tom just went through a list of things on the calendar for next year that could reshape this relationship. And top of mind here, of course, home bias is the election taking place 12 months from now.
The election's got to be there. And, you look at the collapse of TPC, which Ian Bremmer led the debate on at Eurasia Group. I mean, it's going to be a bipartisan pile-on on China. That's a certitude within the dialogue of the American debate. But, my basic thing, and, it's hilarious over the weekend to see the pitching of the outlooks for next year. I don't have an outlook for the S&P. I certainly don't have an outlook for the Dow Jones Industrial Average. And anyone with an outlook on China is out of their minds. Good, it's just go read a book.
The lesson of this year, wasn't it?
Yeah.
The lesson of this year. They're going to reopen, growth's going to be great, and then they reopened and growth just wasn't great at all, Lisa. That's been a story of 2023.
Which is the reason why I wonder what the Chinese government can possibly say to get U.S. companies to go back. If you can't create an outlook, how can you make a big bet?
The way I look at it is surveillance on the balcony of the Peace Hotel in April of next year.
You've been pitching that for a long time.
Spring, and,
yeah.
I think, team surveillance out there, it'd be a good way to have important interviews.
We could send you.
Key focus.
You'd be good out there.
Yvonne Mann and I.
That works.
On the balcony.
New lineup.
It's a very cool balcony, actually. Very, very cool.
Never been.
Balcony.
Never been.
Yeah, very, very cool.
Okay.
On the Bund.
You make that pitch.
Yeah, I'll make that pitch.
All right, we'll continue the market
Working out
coverage.
recently.
Mark Haefele of UBS Global Wealth Management coming up very shortly. Looking forward to that conversation on the equity market. Banner Wager over at UBS talking up rates coming back down to the ones, Lisa, which is just like nothing's changed. Andrew Honhorst literally sat around the table with us moments ago and talked about what has changed. And the view from Banner Wager is what's changed. He doesn't think anything's
John
changed.
Williams.
Yeah, one of the biggest tensions right now. That
Without a
if you
doubt.
get essentially, back to stagflation, back to no inflation.
Without a doubt. Is the tree up at the Keene household, TK?
No, the tree's
Going
not
into
acquired yet. We're negotiating.
Okay.
We're trying to do a mezzanine finance.
Right, it's that
to make that
expensive.
work.
It's that expensive.
Yeah, we're doing a mezzanine.
The tree's up
Apollo's
here at Bloomberg.
involved.
I saw the tree up here at
Yeah,
Bloomberg.
Jim and Apollo's trying to make it happen.
That's beautiful, right?
It's not just one.
Did that warm your heart, Bramo?
It made it less cold.
Part of the baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we could deal with in some way?
It's a real challenge for a lot of families, mine included. I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly. We want to be there for her, but where it's painful for us to see the toll dementia has taken on her. This is rightfully, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California, San Francisco, has been actually one of the key folks, who has been leading some of that research on the impact of lifestyle and dementia. This is a promising area.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew, alongside Kaylee Lines, deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
The market has now fully embraced, not just that the Fed has finished its hiking cycle, but that we're going to see deeper and deeper cuts next year.
The Fed is effectively, in a sense, putting fiscal policy on autopilot.
We think the Fed is going to be lower in terms of cutting rates than what the market is pricing in.
I don't buy the rate cuts that the market is pricing in. Right now, the markets are priced, I would say, for beyond a perfect landing.
We're in the rocky landing camp, at least for now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Let's get your week started live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market on the S&P 500 positive here by 0.05%. The week ahead, TK, looks a little something like this. We've got some Fed minutes, some jobless claims on a 3-week winning streak on the S&P, looking to make it week 4.
New employee tour at Microsoft as well. I mean, 235 this morning. We've been following the soap opera all weekend, along with what we've got. Equities lifting right now. Futures up 3. That's better than they were an hour ago. But, 235 this morning, the world changed here. And you wonder, does Microsoft, does NVIDIA this week, does that lift up the market given the different rate scenarios that we're getting this morning?
Let's separate the stories just for a moment. Let's separate the stories just for a moment. So Sam Altman out of OpenAI on Friday. Big questions being asked about maybe him returning, then all of a sudden rehired, except this time to Microsoft. Microsoft basically up in a pre-market because some people say the adults have taken over and Microsoft wins, Bramo. That's the take from Evercore. Dan Ives of Wedbush as well.
We don't have any idea what's actually going on, except for one thing, which is this was a startup that wasn't for sale, and all of a sudden they got it without even buying it. And to me, this really points to consolidation among the biggest
I totally agree. In the
tech
strongest
players.
terms.
And at this point, what does that mean about how much they are going to diverge, both in valuation and just consolidation from the rest of the market economy?
I don't have a slogan for it yet, John. I'm really struggling with this. Send me in your slogans. I'll steal it. There's a royalty on the back end. But the basic idea here is I'm going to go with the Magnificent Seven continues for 2024. And when you steal Sam Altman under this soap opera, the childishness of it, the adultness of it, as you mentioned, the bottom line is, as you say, Lisa, all the big guys win. That's all there is to it.
Well, let's get to the Magnificent One, and then we can link the two stories. NVIDIA up by close to 240%. year to date. And reporting from Ed Ludlow and the team here at Bloomberg, that Lisa Sam Altman was looking at maybe launching something that could compete with NVIDIA, which raises questions about what might happen next over at Microsoft.
That's exactly what I was going to say. He's going to have a much bigger checkbook if he's working for Microsoft and trying to create a competitive chip. Although, haven't we been told again and again that the barrier to entry is massive and that the expertise is really significant?
Tim Bradshaw had this in the FT last week, and we some great work here. I thought Mark Bergen last hour was great as well with Bloomberg in London. And the basic idea is Microsoft's working on 2 chips. I'm speaking as an amateur. There's no quiz on this, I hope, tomorrow. But they're inventing 2 chips that are not NVIDIA killers, but will allow them, like everybody else, to compete with NVIDIA. And what you need to do here, as we mentioned in the last hour, you've got to hire the talent. That's what Sam Altman does. End of discussion. That's his skill set.
That apparently is what Satya Nadella does as well, and that's what he's done in the last 24 hours. If you look at things, the earnings report that comes from NVIDIA tomorrow, huge for this market, Tom, massive. If you think about what it did to this equity market when it came out with that revolutionary quarter. Do you remember that? We all thought it was too soon to monetize AI, and then bang, NVIDIA were out with a massive forecast.
Meta, I nailed that as well. Facebook, I mean, just the same idea. And everybody's like, oh, this has to change. We're going to switch. We're going to have rotation, And I'm like, what if it just
carries on?
I'll steal that. It's very British. Carries on.
Carries on.
Carries on.
Usual suspects. Meta up by 178% year to date. Then the surprise. Number 3 on the S&P 500 year to date. Would you have guessed this, Tom? Royal Caribbean Cruises at 113% on the year so far. That is not a name I would have picked.
Team coverage, Symphony of the Sea. Pharaoh with hands-on reporting with that. Remember that, Lisa? We got the email from John where he could see the port and the starboard
He was
through his room. It was that,
he never
like
left
one of those
his room.
townhouses on 63rd Street.
Precisely.
You
if
never
I went on a cruise,
100%.
I'd probably stay in the room.
Be in there with some kind of,
Probably. Equities on the S&P look like this. Here are your scores to kick off the trading week. We're positive 0.1%. We can round that up. Yields are up by 4 basis points, Lisa. 447.64.
There's a bond auction today. I am watching it. 1 p.m. The U.S. Treasury is selling $16 billion of 20-year bonds in a quiet week, destined for some excitement. Tomorrow, NVIDIA reporting earnings after the bell. Key to see if they give another blockbuster projection going forward of what they expect from earnings. And this week, on the economic front, we do get FOMC meeting minutes tomorrow. Are they really going to try to make it sound more hawkish to try to damp down some of the expectation for a soft landing? I don't know. Initial jobless claims, as you've been mentioning, the key economic indicator coming out on Wednesday before the Thursday holiday. The economic surprise index in the U.S. has been rolling over, but it's not anything negative. It's sort of at this sort of soft landing-ish look. Does it roll over further, though? That's really what I'm watching.
I'll be really focused on those global PMIs on Thursday. So focused on that.
Yeah,
when they come.
are you?
Not at all. Mark Hafley joins us now, CIO of UBS Global Wealth Management. Bro, I'm not saying they're not important. They are.
I know. You're going to be checked out.
Totally checked out on Thursday. Mark, good to see you. Looking at your forecast, your outlook for 2024, we're at 4,500 right now in the S&P. You've got softish landing for the economy, but very limited upside in the equity market, 4,700, Mark. Can you help us understand that?
Yeah, I think there's a couple of things. First, we do prefer bonds to stocks because we think that interest rates are going to move lower, and that'll help the bonds. On the stock side, we're in a new world, and I'm not sure you necessarily want to focus just on the S&P 500. I think in both bonds and stocks for next year, we're looking for quality. We're looking for those companies that get that high return on invested capital. And so, you were talking about the tech, and we recently, about 2 weeks ago, upgraded the U.S. tech sector again, in part because that's where we're finding quality. And there certainly is, over the longer term, this kind of big is going to do better theme that we want to play on.
This is really important, Mark. When you look at the income statement or the dynamics to cash flow and the balance sheet, what is it about tech? Where on the income statement will we see that reaffirmation of quality? Is it sales off nominal GDP or off their plan? Is it down the income statement, gross margin, or is it use of cash at the bottom?
Yeah, I think it starts at sales, even though a lot of these firms are becoming more consumer facing. One of the things that's changed so much about tech is you have more of these recurring revenue models in tech. which speaks to stabler earnings and earnings that can maybe grow as we get that slowing overall GDP growth. And then, of course, it flows from there down the income statement to produce more free cash flow.
I just think about this article talking about automated capitalism over the weekend, which is essentially the revenue streams that you're talking about for some of these tech names, like, for example, Apple and the Apple Store. You talk about how big is going to be better going forward, Mark. Does that mean that the Russell 2000 you can just basically leave for dead after one of the worst underperformances going back decades this year?
Well, look, we think that we're going to have a softish landing, and then I think in that scenario, some of the more dire predictions for what happens with the small caps and that they can't refinance and things, that goes away. So I'm not making a super dire prediction on small caps. I think the point is, where in the past you would think, oh, these large tech companies in AI can't keep growing. But what's so interesting, is that actually these firms that own such a large portion of the value chain now and get those insights that can train these AI models may have an enduring advantage despite the fact that they've been up so much this year. And so that's one of the reasons that we upgraded the U.S. tech a few weeks ago.
And are you leaning more into the AI names, right? I mean, tech is not all the same in terms of whether it's Apple or whether it's Microsoft. Are you bifurcating some of these bets, or are you just saying all of them are going to be winners regardless of their niche?
Well, I think there's a couple of slices at this depending on your time horizon. I think, over the longer term, one of the most exciting things is that the AI will broaden out, beyond the tech names and could potentially lead to certain disruptive companies having stronger margins, and so we're on the look for that. In the very short term, I think one of the things we're looking at is that actually, chips can do better here as well. So we're looking, say, beyond just software, but also at hardware at this time.
Mark, does this remind you of the internet boom? And do you see it playing out the same way in equity markets, that you get this sort of frenzy and then only a few win?
I think about that a lot. I think that was somewhat different in the sense that, what we're specifically talking about now is quality, and we're talking about free cash flow. And free cash flow was not what we were talking about in the internet boom. That was about eyeballs. I'm old enough to have lived through it and make this comparison and force the team to look at this a lot. But I think we are finding some real differences.
I want to know what we're going to do with this wall of cash. Lawrence McDonald talks about it, one of my essays of 2023. And Mark, we all know there's a ton of money out there, but does it just sit like a lead brick, or does it actually finally get put to work?
Well, we're urging our clients, and I think they're starting to understand that right now you can get these tremendous yields on cash, and so it's hard to move that cash. But as these rates start to come down, I think that will start to move this wall of money. And some of it can go into supporting the equity markets, and some of it can go into supporting the bond markets, and some of it can go into private investments and alternative investments as well. And that's why we think this is a great time to get your portfolio in balance back to what your asset allocation is, and maybe forget about rates going negative again and really think about what does a proper asset allocation look like.
I think we all hope we don't go back there anytime soon. Mark, thank you, sir. Mark Haefele there of UBS Global Wealth Management with their outlook for 2024. Here's a top line from them. Softish landing, probability, they put it 60%, which I would say is pretty low conviction. S&P 500, 4,700 year-end next year, not this year. The 10-year, 3.5%. TK, the euro, 112 against the dollar.
Great scenario analysis. A very productive 72 pages is what I believe. I counted it with the I only read 3 of them, but I got a 72-page outlook, and the answer is scenario analysis here I think is valid based on what any individual's belief is. My belief, and this goes to Lawrence McDonald's great essay, John, add up the wall of cash. I believe I saw a 13 trillion statistic. Don't quote me on that, but the wall of money out there, what happens? I don't know.
What's the opportunity cost of standing cash? TK, in 6 months' time, will you be happy you have dry powder? or upset with yourself for not locking in what's currently available further out along the curve? We can have that conversation later on today, but they're the question you've got to ask going into 2024. If you are just joining us, welcome to the program. Your S&P 500 looks like this. We are positive by 0.07%. Yield to higher by 4 basis points on a 10-year, 4.48. That is not what we saw last week. At least what we saw last week was yields aggressively lower off the back of this very tiny, small, as Tom would say, teens-weens downside surprise on the inflation report.
But just to pair that to what you're talking about, what will it take to unleash cash, right? I mean, if the yield gets down to 4.25% on cash, do suddenly people see perhaps a greater opportunity cost for not going into other assets? And this is sort of the interesting push-pull that people haven't established yet.
I like the way Mr. Hafley answered that. I mean, it's going to be marginally a little bit here and there. There will be excitable moments, which we'll talk about, but just deploying marginal cash. I did the math today. When is Microsoft a $3 trillion company? It's a share price of like $4 per share. We're not that far from that. And that's that marginal cash coming in based on a belief.
That's a Dan Ives type call.
It is.
For sure.
You know, it's because the adults won.
The adults won, as he said, yeah. OpenAI was playing at the kids' poker table. Is that what Dan said? Something like that. We're going to hear so much
we're
of
going to
this
get in
nonsense
trouble
through today. I know.
The three of us are just going to get in such
So we're going to wish the
trouble.
president a happy birthday. And the gift we've got is that NBC poll that Anne-Marie's going to break down for you next here in New York. From New York, good morning.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
We are hopeful that we can get a significant number of hostages freed in the coming days. We're talking about pausing the fighting for a few days so we can get the hostages out.
But
It's not a ceasefire because we will continue to push against Hamas, but we are willing to go for a pause for a significant number of hostages if we have a deal.
That's the latest out of Israel. That was Michael Herzog, the Israeli ambassador to the United States, speaking on ABC over the weekend on the state of hostage negotiations between Israel and Hamas. This story is starting to become a bigger and bigger issue for the President of the United States. The latest poll from NBC, another low for the President, just 33% of all voters approve of Biden's handling of foreign policy, which is down 8 points from September. Tom, there is a very specific demographic that is worth looking at a little bit more closely. Among voters aged 18 to 34, in September, 46% of these voters said they approved of Biden's job performance. Now, Biden's approval rating has dropped to 31% Tom, in that demographic, 18 to 34.
I'm benumbed by polls, but I like within the NBC reporting, Bill McInturff, who's an actual adult in polling, says this was a stunner. And I think that's the key thing, including within the margin of error, the former president beating him, granted, within the margin of error. But it was a stunner. Let's continue on this. And really a weekend brief as we were distracted by Silicon Valley soap operas and maybe what we're thinking about to the outlook. There's the outlook for the Biden administration on an 81st birthday. Anne-Marie Horton briefs us now, Bloomberg, Washington correspondent. What a weekend, Anne-Marie, and all of it wrapped around a birthday for the president. How will the president celebrate this 81st birthday?
He's pardoning a turkey, so he's getting ready for Thanksgiving. He has the whole rose garden, the turkeys come out. I mean, you know the spiel better than me. And then he's going to be going off to Nantucket to enjoy
Does
Thanksgiving
the turkey
with his
really
family.
take a room at the Hay Adams? Do they really do that?
I think so.
Yeah, I mean, I can see it happening.
And then for a nightcap at the, the bar underneath.
But it's like
Adams.
a politics from another time, and this coming up on the 60th remembrance of John F. Kennedy's assassination. That's all old school politics, and the president is part of that old school politics. How does an 81-year-old dude become new politics?
Well, his issue, the fact that his birthday is today, on the heels of this poll where 16 surveys have been conducted by NBC since 2019. This is the first time you see that Trump is beating Biden in this poll. It's within the margin of error, but also how low his polling number is. And to Jonathan's point, he has a real issue right now, and our Bloomberg Morning Consult poll showed that as well, with the youth. The youth does not like how he's handling this Israel-Hamas war. And this is where his poll numbers are starting to drip. And then one note about his birthday, I would say, in our poll, we have this open-ended question. You can write in what you think about candidates. And by and large, we have respondents continuing to write in that Biden is just too old. His age is a much bigger problem than, say, it is for the former president, even though Ron DeSantis this weekend on CNN said if Trump were to be president in his inauguration in January 2025, he'll be older than Biden was when Biden took that inauguration on his first term.
Any indication that the White House is beginning to take these polls seriously? Because they've shrugged a lot of them off. Are they changing?
Outwardly, they will shrug them off, and they'll say to you, we have 11 months left. Biden will always go up to you and say the polls have been wrong before. But internally, there's a lot of reporting that New York Times Siena poll really shook the White House. And you actually see a little bit of a rift happening with David Axelrod and the White House, who apparently called him a P-letter word. And Maureen Dowd wrote about this in the New York Times over the weekend because his urgent message to the White House and the campaign is potentially, you look at these poll numbers, maybe Biden needs to pass the baton on to a younger generation.
And so is there anyone that they're coalescing around to try to replace potentially President Biden?
No, Biden is still the lead Democrat when you look at poll after poll. There are people who are jumping in, like Dean Phillips in Minnesota, and he's coming out, and he's a Democrat who is bashing the administration on some of their handling of issues, but his big theme is that there needs to be a passing of the baton. But there's a number of governors, if you look around the United States, who could easily jump in. I mean, Biden joked about it at the APAC summit I was just at in San Francisco. He said, clearly, this guy wants my job. She was talking about Gavin Newsom.
How much are we looking at a scenario where potentially he could see himself losing and then he can get somebody else? How much is this going to affect his policy as we head into later months of a very difficult war, both in Israel and Ukraine?
Well, I think you're already seeing it affect some policy, right? In the sense that you do see the administration really pushing for a hostage deal. They don't want to come out and talk about it verbally. My sources have told me that this deal has been on the table a number of times, but at the last minute, it gets ripped apart. If there was to be a hostage agreement and a pause in fighting, that could potentially help Biden in the polls, because the youth vote, Muslim Americans, do not want to continually see thousands of Palestinians die, and this is hurting his numbers. But Americans normally do not go and vote on foreign policy. Yeah. We have to remember we are still 11 months out from the election, even though it's poll after poll that is looking pretty dismal for the Joe Biden campaign.
So what is your ballet to January 23rd? I believe that's a New Hampshire primary. Maybe there's an Iowa caucus. In the way, do we go to Thanksgiving and ramp up, or do we go to Christmas and ramp up? Do we go to New Year's and ramp up? When's the Anne Marie Horton ramp up?
Probably January, I would say.
Maybe January.
Yeah, I would say in January. Also, President Biden is spending this week with his family. I mean, he is running, but if there's any doubts that he wasn't going to run, it would be this week that he has that conversation with his family.
They do appear to be taking this age thing very seriously. The handlers around him are changing the way that he turns up to events. I even heard some reporting suggesting they're only going to allow him to make shorter walks. Have you heard these things as well?
Yeah, there was even a report that the Secret Service backstage at events are making sure they have flashlights out to make sure he doesn't ever trip. Also, we do know
that for me.
We do know that they also on Air Force One changed the steps to make them shorter and easier steps to climb and come down to help him if he's going to fall. They want to make sure that the president is safe at all times, but also that he isn't making a fool of himself. And that's why the age issue for Biden is such an issue, because you think about the fact that he has fallen, he has had a number of gaffes. So when you question, is he fit and is he too old, people remember these moments.
You're a great student of this with Jimmy Carter and the Carter family and the death of his wife. How did we get to this gerontocracy? From where you sit with your great work, you're shockingly too young for this, but from where you sit at AMH, how did we get to this faith in ancient people?
I don't know, because you see it in the White House and you see it in Congress. It is not just...
It's everywhere.
It's everywhere.
Why?
I think there's a few reasons why. It is very expensive and difficult to run for office, and you don't make a lot of money when you're in office. So you either have to be older and have accumulated some wealth in the private sector. Also, I think a lot of young people are just over it. They're apathetic. They're not in the fight the same way you see some of these old-timers.
Final question. What's a P-letter word? Everyone wants to know.
It was a prick.
Okay, all right. I think we're allowed to say that. Can we say that?
I just thought it was rude for Monday morning.
Like a pinprick.
Sure, that's exactly what it meant.
That's what it means.
I couldn't think. I even Googled what is a P.
Bravo to the rescue.
Also, this is not my reporting. This is reports out there, Politico, New York Times, but that's apparently what Biden called David Axelrod.
Oh right, so he got angry
At David Axelrod for calling for other people to potentially.
I've heard reports about
and for
him
them to
getting
take
angry.
these polls seriously.
Apparently, he does get angry.
Has he ever gotten angry at you?
Yeah.
No.
No.
Oh, okay.
Apparently, he gets angry. You've seen those
Oh, no,
reports before?
no,
Yeah.
no, there's been a
Yeah,
lot
he
of
has a
reports.
temper.
Has a temper.
I don't.
Okay. Not at all. You don't have a temper. No. AMH, thank you. It's good to see you. Great to have you in New York. Thank you very much. Equities on the
Why
S&P
don't you
shaping up
stay?
as follows. Futures unchanged here in the equity market. TK. In the FX market, 109.25 on a euro, positive here by 0.1%. The dollar with the worst week going back to July. We're going to catch up with Jane Foley of Rabobank on foreign exchange in just a moment on this dollar weakness, Lisa, off the back of this bond market move.
We've actually seen some real breakouts and new levels on the euro. It's been so exciting.
109.
It's not
We
even
moved.
106.
We actually moved
That's
one
exactly
big
how I
figure.
feel. It's just amazing. We're not just talking about the same figure again and again. It's pretty scintillating.
109.26. Bramo excited about the week ahead.
Yeah,
Thanksgiving
of
just
course,
around
always.
the corner.
Yeah, it's great. You know,
Lisa's heart is warmed.
Pilgrims
Less
came
cold.
over to the colonies. You know, it's great.
We could do bedtime
try us.
stories.
Yeah.
Yeah.
The pharaohs were on the
kids.
Mayflower.
Were we?
the reception, the acceptance of Purosangue has been extraordinarily high. We had to stop the order for a while because we had to understand how to manage the supply chain. So there is a strong traction of Purosangue all over the world.
How much do you worry about increasing production and therefore becoming, I guess, less high-end luxury?
We are making 13,000, 14,000 cars per year. We will not grow a lot in the future because we want to grow more for value, not for volume. And maybe one number, you know how many cars Ferrari did we put on the road since the beginning, since the first one? 250, 260,000. So 250,000 cars in a market where there are million and million of cars every year.
I'd just like to apologise for Anne-Marie's language in the last 10 minutes or so.
On.
Just absolutely dreadful. Not what I expected from Anne-Marie Hordern.
Okay, you just totally baited her.
Bramo, stop.
Oh my God.
We expect better.
What is that word? Tell us. Please.
We have higher standards here, okay? She may or may not be back tomorrow. Equity futures on the S&P 500 just about unchanged, going nowhere. On the Nasdaq up 0.1%. 3 weeks of gains on the S&P 500. 4 days of gains going into a shortened trading week because of the Thanksgiving holiday. Tom, tons of data though. Looking out for jobless claims. I believe
we're loaded up on Wednesday. Yeah, we do like 3 days of data on Wednesday. Back to Anne-Marie, and I think this really shows up.
Don't let it go.
In the generational gap. No. The people that are migrating away from conventional American politics aren't worried about the niceties of former media days. They're weaned on YouTube, TikTok, all the articles over the weekend about the TikTok generation and politics, and there's no language barriers there.
No, the language of politics has changed.
Yeah.
The language of politics. I don't think it's just down to social media. It's the politicians in the seats, Tom, that have changed the way
reacting to trying to garner that youth vote. And it's not like you went to Madison, Wisconsin and picked up the University of Wisconsin liberal vote. It's a broader thing. It's a more Latino thing. It's a what is the youth of America going to do here? And critically, are they going to show up at the voting booth?
Well, I don't know anything about what you've just said. What I say is this, just to go a bit deeper. This is about being anti-establishment, going against the incumbent, and using a language that's not typically associated with modern-day politics. This is now modern-day politics. And I would stress this, Bramo, just for example, look at what's just happened in Argentina. Look at how that listener, look at how that leader addresses the electorate, talks about the establishment, the incumbent, and this is the change we're seeing, at least from global politics.
And it's too complicated for me to understand all in one swoop, whether it's a lack of understanding nuance, whether it's the way that things are covered, whether it's the ability for people to be honest and then have their proposals analyzed in real terms. But that's what breaks through. That kind of discussion. Let's just get rid of it all and start over.
Rip it all up.
Rip it all up. Get away from the education ministry.
Exactly. You know, shut down the central bank. Get rid of the peso. Restart. Nothing's working. Start again.
We call that Liz Truss, right? Was that? But John, seriously, was that the Liz Truss approach?
Well, what's funny is Liz Truss wanted tax cuts, and apparently this government is now considering tax cuts going into the new year. So,
I mean, there it is.
Let's not do UK politics. That's another level of crazy that I don't really want to talk about this morning.
Okay.
That's the score in the financial market right now. Futures just about unchanged. Going off on a bit of a tangent about establishment politics. Let's get to your top stories this morning. Under surveillance this morning, Israel and Hamas working on a deal to release a large group of hostages, according to US officials. Axios reporting the deal would allow more than 50 women and children to be released in exchange for a pause in Israeli military attacks and, Lisa, a release of some Palestinians held in jail. The Israeli offensive now pushing farther south into Gaza with the possibility of more troops.
It does seem like maybe there is some deal getting closer with respect to a hostage release, and how much of this is because, in part, Israel is coming under so much pressure for additional pauses that maybe they've made enough progress to be able to do that at the same time as appeasing some of the at-home unrest as a result of the lack of focus on the hostages. Honestly, we're going to be focusing increasingly on what happens after.
Oh, without a doubt. More still to come. This is a developing story through the weekend and into this morning. Your next story, this developing from Friday. OpenAI co-founder Sam Altman joining Microsoft after a surprise firing before the weekend. Altman was ousted by the board of OpenAI, claiming he had, quote, lost the trust of the board of directors. The move sent shockwaves through the AI industry and Microsoft, a major investor in the company and supporter of Sam Altman. Microsoft CEO Satya Nadella saying Altman and Greg Brockman, who quit the board around the same time, will lead a new in-house AI development team. The takeaway, the conclusion for so many people trying to follow this story, Lisa, is Microsoft won. Microsoft won.
And we'll keep on winning. And this is really the key question. What's going to stop them from the winner takes all? And we heard there from Mark Heffley. Essentially, he's betting on the big tech names because they are going to be dominant. The big is better kind of theme is going to continue. It's going to raise a lot of questions, how we're going to rearrange not just tech leadership, but also kind of our economy.
And Microsoft winning, hard to say the same thing about Twitter. Elon Musk defending himself amid rising accusations of anti-Semitism. Musk posting this on X saying, quote, this past week there were hundreds of bogus media stories claiming that I am anti-Semitic. Nothing could be further from the truth. I wish only the best for humanity and a prosperous and exciting future for all. A growing list of advertisers have pulled their spending after Musk endorsed an anti-Semitic post just last week. Tom, this has been building. There were some reports that Linda Yaccarino has been under pressure to
you wonder what she's going to do.
Apparently staying gone.
Well,
this one's ongoing.
At the speed of Sam Altman, we'll see what Ms. Yaccarino will do. What I would focus on is this morning, there was some fleece thing for sale on Twitter. I happened to, we'll go over and Google it, and all over Google, the thing is a total scam running through the Twitter, saying that's the allegations that whatever it was coming through Twitter is a scam. And the bots and the sex bots are exhausting. Twitter's become a garbage feed for me. That's a fact.
Well, this was a problem before he took over.
Before
it was
the
something
Nazi
that he was
thing and all
hoping
that.
to address, and Tom, seemingly based on the user experience, difficult to say it has been.
It's much worse. It's embarrassing. I'd be embarrassed if my kids were on Twitter. I mean, it's just that simple. There's no other way to put it. We're going to have Bramo bring in Jane Foley here. Bramo is beyond excited that we've had a one big figure move in selected foreign exchange. So we sort of snoozed off with Jane Foley in London last time we saw her. Maybe we could do better. Why don't you bring in Jane here with big moves in foreign exchange?
Hold on a second. We did not fall asleep. It just seemed to be range bound, and now we've actually broken out to 109. The low that we got over the past couple of weeks was just a bit ago at 106.77. 104.67 on October 3rd. This has been a big move. Is it the beginning of something more? Jane Foley, that's really my question. Are we going to start to see more protracted dollar weakness?
Oh, this is, I think, really exciting, and I think we're at a really pivotal point. And of course, that started with the CPI data. And of course, right now we've got a question: well, is this a little bit overextended? But one thing is for certain, that the dollar has a pretty good inverted relationship with risky assets. Say they're emerging market stocks. So basically, what that says to us is that when interest rates in the US go down, well, risk appetite globally goes up, and people move the money out of dollars. So we know that. What we don't know is if the market's got the timing right about, the interest rate cuts coming from the Federal Reserve next year. Are we going to get some pushback? Are we going to get more pushback about that, for the next few weeks? Is the data going to be a little bit more choppy? And I think that's probably what's going to happen. We will get some choppiness there. So we're probably not on a straight line, but it does appear that we are at a really pivotal point, which might just be a little bit more protracted than many people hope it's going to be.
Jane, with the multi-decades at Rabobank of hedging, is there a bet within this range-bound market that will allow for acceleration or convexity of moves? Is there an ability here to be surprised by big figure moves?
Well, there's always an ability to be surprised, and we've seen a lot of them now. But we know that these central banks are data dependent, and therefore, we don't get the forward guidance. Therefore, perhaps there's more scope to be surprised by all of this. And of course, you mentioned the elections. There's a huge amount of elections in 2024. I mean, I think there's a figure like I think countries with a collective population of more than 4 billion, half of the world's population will go to the polls next year. So it's not just the US. We've got elections in the EU and Taiwan and so many really pivotal places. So there's a lot of scope, I think, for excitement to be injected into the price.
Okay, well, I love this. Jane, give me a big figure move. Give me your pair where I can make a Bramo-like 5-6 big figure move into June of next year.
I think you probably look at the Swedish krona for one. That's just started to turn around. That had huge amount of weakness for the last couple of years. That's beginning to turn around. I think
Kroner against what?
Coming back, even against the euro. If we look at the Aussie dollar, if the risk appetite does pick up, and of course that's the big if, it will eventually. But this could be a protracted time of the market, trying to pick out and maybe knocks back from data, knock back from the Fed. But perhaps if we go, towards the latter half of next year, I think the Aussie will do really quite well because the fundamentals in Australia are really quite good compared with many other countries in the G10. But of course, that necessitates a pickup in China too. So, China is going to be a really important part of this risk appetite story and how it emerges in 2024.
But Lisa, that's right where I wanted to go, which is Aussie off Pacific Rim going north. I don't know who you play, Aussie, Sing Dollar, Aussie, China. I'll leave that to adults like Jane Foley. But to me, Australia always has a modest surprise here. Plus, they won at cricket. They beat Sachin Adela's India. So, if they're long cricket, you go long Aussie.
I'll leave you to the cricket updates, but just sticking with the Pacific Rim, there is a question, if you want a real big surprise, maybe Japan is the way to go. And that's what PIMCO is doing, going into the yen, expecting that maybe a bit of softening in the stance of the Fed and even rate cuts sort of gives an opening to a move away from yield curve control. Are you buying that?
I think it will happen, but I'm still not too excited about the pace. Yes, I mean, I think the real story for 2024 will be, yes, more unwinding of yield curve control, but it's when are they going to be able to hike interest rates? And I listened really carefully to the comments from Ueda just a couple of weeks ago. He's still really, very cautious. And then we had some very disappointing GDP data from Japan. And of course, that's what we need. If we had better growth in Japan, we'd all be a lot more confident that they can move away from negative interest rates. So we need to watch the economic data, and as long as that's sort of disappointing, I think it's still difficult to get too excited about the pace at which this unwinding will come. But we have started, or Japan has started the process of this unwind from very accommodative monetary policy settings. What the question is how fast can they really go?
Jane, let's get away from G10. Let's go to something different. Finish on this. How does a country experiencing more than 100% inflation get rid of its currency and replace it with the US dollar? Jane, I'm sure you and the team have given this some thought. How's this going to work in Argentina if this is the road he wants to go down?
Well, I mean, that's what he said, dollarization, and I think what they probably do is probably just use the dollar a lot more in trade, price things in the dollar and just piggyback off the back of the Fed's much more credible interest rate ability. So it's just that piggybacking off the Fed as much as they possibly can. But this is not going to be an easy dynamic, as I think we're all aware.
There's going to be nothing easy about this. Jane, thank you. Jane Foley there of Rabobank. TK, how many times have we done this with Argentina? Back and forth, back and forth, back and forth.
And to that point, it's cultural.
Amazing.
I mean, I think it's an immense challenge for people in the IMF, which is very rules-based and agreement-based when they make these agreements. How do you make agreements with what we're all witnessing the last couple days?
The century bond. Remember that? If there was a poster child for the crazy times of the last 10 years predating the pandemic, Lisa, we often mention the Austrian century bond, but once upon a time, that was somewhere you actually wanted to buy, given the direction of rates. Just the idea of Argentina issuing a century bond.
It was funny at the time, given the fact that they had defaulted, 5 times before?
Yeah.
And it looks like we might be headed for number 6.
Yeah, I would point out also away from that is some constructive views, not a uniform opinion, but that Turkey may actually get this done under the wonderful economist Simsek, who came in and is trying to clean up the Erdogan
been a positive
mess.
turnaround for sure.
And there's some scenarios that adults have here of lira, I'm going to say going 28, 29, perhaps down to 23 or 24. That's very different from the Argentinian
But don't forget
dialogue.
this. I think it was Macri in the century bond. Macri was going to turn around Argentina. This was the establishment view at the time.
The elite view.
What happened? Yeah. And here we are sitting here and people are saying this guy's going to destroy Argentina. That's the establishment view. Tom, it seems to me that nothing works in Argentina.
As I said, it's a culture, this is dangerous ground for me, but with great respect to the Argentinian people, there's some real question about they have their own rule book they play by. is sort of maybe how they feel about it.
If you're just joining us, check out the scores of the equity market, just turning negative just for a moment, down 0.04%. Yields turning higher by 4 basis points, 447.64. We need to talk about politics and policy. We'll do that with Terry Haynes of Pangea Policy. We'll catch up with him in about 30 minutes' time. Off the back of that dreadful poll, another one, Lisa, for the President of the United States.
Which raises this question, are they going to really take it seriously at a certain point? And the whole David Axelrod sort of tit for tat was really interesting because this was someone who supported President Biden in a massive way when he was vice president, has talked extensively about his connection, and he's basically saying, you got to pay attention. These polls matter. They actually do hold a significant message.
Yeah, there's a history, I've mentioned this to Terry Haynes before, of sitting on the couch when LBJ stepped aside, and I don't remember the ferment before he stepped aside, but his polling and tone with the American people of Vietnam was grim. Is this any different, frankly?
A conversation on OpenAI and the big win in many people's minds for Microsoft. Mandeb Singh of Bloomberg Intelligence on that company in just a moment. Microsoft up in early trading by 1.4%.
Have you thought maybe I should go do something else? I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
How would you describe your relationship with Satya Nadella, how much control they have? I've heard people say, Microsoft's just going to buy OpenAI. You're just making big tech bigger.
Company's not for sale. I don't know how to be more clear than that. We have a great relationship with them. I think it's that these big major partnerships between tech companies usually don't work. This is an example of it working really well.
It's such a fascinating exchange. Looking back, the former OpenAI CEO Sam Altman speaking to Bloomberg's Emily Chang earlier this year. Altman now ousted from the company late Friday. He will join Microsoft to lead a new AI development team. Tom, what a turnaround. The face he pulls when Emily starts asking him about Microsoft maybe eventually running OpenAI, no chance that's going to happen. This relationship's great. It's great for him and Microsoft. It's broken down between OpenAI and Microsoft, you'd have to say, Tom, after the weekend.
It's moving at real time, and without getting into the soap opera, and frankly, I don't understand it all, it was an incredibly naive nonprofit board made up of essentially non-professionals and one legit computer guy who sort of joined the dark side, if you will, versus people that can constrain and hire engineers and keep them happy while they work.
There's an uncomfortable tension right now in Silicon Valley, it feels like, between idealism and capitalism. And OpenAI has been talking ideals. There's a lot of effective altruism of SBF, Sam Bankman-Fried, that you kind of heard going through some of these same people, and talking about nonprofit, bettering humanity, And now we're talking about nuts and bolts, massive profits. How do you pair those two with controls to make sure that it doesn't become dangerous or problematic in some sort of bigger way? Unclear. It's moving faster than any regulators and moving faster than many of these founders really can get a handle on.
Theranos, Elizabeth Holmes.
Yes.
The same thing. Whenever I hear stuff like this, Tom, radar's up. Radar's up
big time, and that's the generation.
Maybe that's just super cynical of me. I
empathize, believe it or not.
I just don't buy it. Just don't buy it.
Well, right now, we're going to dive into this. This is really important, and I'm going to give you a little bit of visibility here. There are people like Mandeep Singh and our Anurag Rana who actually walk in offices, sit down at desks, and work. Their hallmark, their guidepost, is a guy named David Cutler. Dave Cutler was legendary at Digital Equipment DEC years ago in Maynard, Massachusetts. They stole him to the West Coast of Microsoft. He was one of the founding forces behind something we all do, Windows NT. Mandeep Singh joins us now and knows Dave Cutler, the giant of Microsoft programming. This is about Dave Cutler's. All this is about is this kid Altman can bring the meat over to Microsoft.
Look, I think in this case, it sounds like the CEO was too overconfident and didn't really talk to his executives and, the board. And you come to a point where he was making all the decisions about the future of the company. And look, there's no doubt the market is real. I don't think, you can compare it to a Theranos or one of the hypes here because there are so many other competing companies that are trying to do the same. The CEO really wanted to move fast in this case, right. And clearly the board and the executives weren't, in line with.
There will be 40 phone calls made today. Mr. Altman, Brockman, I believe it is, who's joining him, is well. What are the attributes they will use to sell a given really super byte, first in their class, and everything? One of these whiz kids. What are the attributes they sell to say join us at Microsoft?
Well, so clearly Microsoft is the compute infrastructure that's powering all the OpenAI, LLM.
Yeah, but what are they doing? Come on, stock options? Is it Mariners tickets? What gets these guys to move their slide rule over to Microsoft?
I mean, that could be an exit, but I can't imagine Microsoft really going out of the way to attract talent. Look, they hired Sam Altman, and they will leave it on him to figure out which of the engineers really he wants on his team at Microsoft and how to get there.
How much do they make a year?
Well, we're talking about over $1 million for all of these engineers. So clearly, yeah, that's...
Why is this guy so important?
So he was the face of OpenAI, and think of ChatGPT as the verb when it comes to generative AI. That's why it got so much traction, and he was the face of the company. But clearly, there were a lot of engineers behind the scenes that were part of the development, and they weren't on board with his approach. They had concerns around AI safety, and that's one thing that I think everyone needs to think about in terms of the roadmap for when this technology will be deployed. There is a lot going on in terms of developing it, but in terms of really changing your production environments with generative AI, it could be a few years, and that's where I think not everyone was in sync.
If they were more concerned about safety on Friday, are they more or less concerned this morning, now he's at Microsoft?
Well, so clearly the talent loss is a big concern, and that's where the board got it wrong, the way they went about it. And clearly, I mean, from all we know, OpenAI could lose almost half of its value just because of the fact that they lost the CEO.
But does it raise a question about policing of some of these developments at a place that is focused just on making money, the bottom line, and when expectations are pretty high in the market?
Well, so look at the development of, ChatGPT and all these large language models. It's pretty expensive. And for any startup to sustain themselves, right now we are talking about, billion-dollar R&D budgets. So how do you sustain it? So I don't blame, Sam Altman for trying to be ahead in terms of monetization and thinking about it, but not having your executives on board about your thinking or your board. I think that's where he got it wrong.
Well, but I guess that I'm wondering from a humanity standpoint, if we're going to go with some of the ideals that they're talking about and the fact that the board was concerned about bots that could kind of take on a life of their own and give all sorts of information online. We're already seeing some sort of emblems of that. How much does that just get magnified with a move to Microsoft that doesn't necessarily have a nonprofit board trying to espouse these values.
Yeah, and look, the Google approach so far has been, they've been very protective about, what they release. So they have been very conservative. A lot of people have actually blamed them for being slow and not releasing their Gemini large language model. But this sort of validates the Google approach, that you have to take a measured approach when it comes to releasing these models, whether it's open source or proprietary. I think we know OpenAI was, even though it's a nonprofit, everything is proprietary. Well, I think this brings into focus what should be open source and what can the community work on it collectively. And I think that's on the table now that Sam is moving to Microsoft. I wouldn't be surprised if they go with an open source approach, because Satya Nadella's focus has always been on embracing open source since the time he took the helm.
We've had this conversation already a few times this morning. Let's finish there. We've reported that Sam Altman was trying to create some kind of rival to NVIDIA. How seriously should we take that now? He's got a seat at Microsoft.
I mean, Microsoft announced a new chip of their own last week, right? So clearly, Microsoft also has ambitions in terms of developing their chip, but at this point of time, I mean, now they have to think about what is the IP that Sam can create over the next 6 months. Can he develop a large language model that's equivalent to ChatGPT in the next 6 months? Because it's proprietary. That's not coming over. Even if he hires the engineers have to build it from scratch. And data availability is in shortage. They can't get the same amount of data that they had before.
It's a tough question. Microsoft's up about 1% or so in the pre-market. If OpenAI was trading in the pre-market, where would it be right now?
I mean, at least 50% down.
You think that hard?
Yes, because now their IP is gone. I mean, especially with Sam coming over this side, Microsoft has to redo everything from scratch unless the board resigns and Microsoft ends up acquiring OpenAI. That's a plausible scenario, but if they have to build it from scratch, now we're talking about a very long timeline. I mean, Google is clearly ahead in terms of developing their model.
So everyone's saying that Microsoft has won, but if they've got to write down that stack by 50%, have they won?
Well, so, I think talent acquisition is one thing. I do think when it comes to large language models, I mean, there are a couple of open source large language models, but you could use that to build yours on top of it. I don't think, you can replicate what ChatGPT had. Again, I go back to the verb analogy because everyone thought about, generative AI and ChatGPT as synonymous.
Mandeep, thank you, sir, for the update. Mandeep Singh of Bloomberg Intelligence. Gripping stuff over the weekend, Lisa. Everywhere I looked, Twitter, any news site, Wall Street Journal, Financial Times, an obsession with this story since Friday evening.
It's been the obsession of the stock market. If you take a look at the gains, it's been the obsession of anyone who mentions AI. That's the new, blockchain. You say AI and your stock pops 10%.
Do you remember that blockchain, Ice-T, Long Island Ice-T?
Yes, that one.
Blockchain.
Yeah, I remember. Overstock to blockchain.
Was that 2018?
Something like that. It feels like a really long time ago.
It was a long time ago, TK. The frenzy around blockchain.
There was a frenzy this weekend. It's conflating the social of this and the hagiography of this with like actual substance, like we just heard from Mandeep Singh.
Mandeep, thank you. It's good to see you. We'll catch up with you later. Keith Lerner of Truist is joining us shortly. Your equity market right now turning just a touch negative. We're down 0.06% on the S&P 500 from New York. Good morning.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology. the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think we're in the early stages of a classic year-end rally.
The resilience of the functioning of the market has really impressed me.
I think we're seeing huge pro-cyclicality in pricing in capital markets.
We're going to see moderate gains in the equity market in the coming 12 months.
The equity market has hit an all-time high each of the last 5 times that the Fed has paused. We think this rally has legs.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. We welcome all of you to Bloomberg Surveillance. It's a holiday-lengthened work week. Where we'll be Wednesday, we'll be over the river and through the woods with some economic data, and maybe Sam Altman will already be through training at Microsoft.
And a pumpkin pie. That would be a wonderful thing, won't it? Yeah. We'll have some jobless claims data as well. You don't have pumpkin pie, thank you.
No, we have pumpkin pie. Yes, we do.
I've bought you one before for Thanksgiving.
Although usually the way I cook is like I go to a restaurant.
I've done that with you too on Thanksgiving. I've experienced that as well. Jobless claims comes on Wednesday before we get Thanksgiving.
Everything's on Wednesday.
Thursday. Claims, I think, is really, really important. So if you have confidence that yields are going to fall from here, how much confidence do you have that equities rally off the back of it? And another way of framing that question, I think, and it's a question we'll ask all week, when you look at jobless claims and they start to creep a little bit higher, what's the difference? How big is the gap between a welcome loosening of the labour market and an unwelcome deterioration of the labour market, Tom? How close are we to that conversation changing?
You'll have to look at the chart, and I look at the 4-week moving average there, and there's other things like durable goods we can moving average out, but to me, it's just a data-dependent Fed, and there's like 8 narratives out there, and Lisa, the narrative this morning is simple. There's a pullback. At 4.902 year yield, Lisa, is anyone modeling that we revisit 5% on the 2-year yield? I don't think that's out there here in Happy Land.
All I'm seeing right now is actually stability, and we saw that at the end of last week, and then this week, 4 basis points is bupkis, right? That's nothing if you take a look at what we've seen over the past couple of weeks when you look at yield moves. But to the key question, when does it shift? When do we get another narrative shift from soft landing to something that's a little bit more pernicious? I don't know the answer, right? I mean, this has been a very difficult moment to call when it comes to the narratives that people cling to on any given day. What will be the trigger point for people to suddenly feel bad? I don't know. I mean, I'm no expert on this. I'm always sort of, cynical, which is not necessarily a good thing. And on the holiday season, why should anyone feel cynical?
They used to change every month.
Yes, exactly.
They change now every couple of days. last week was a classic example of that. To see that small downside surprise on CPI on Tuesday, soft landing Nirvana. Neil Dutter's words over at Renmac. A few days later, we're talking about Walmart, goods deflation, and the prospect, Tom, of a hard landing.
You nail it in that there's all these disparate narratives. We're going to talk to Keith Lerner about this in a minute, the confusion of year-end outlooks and that. And the fundamental issue is Mr. Dutta's original insight that if inflation comes down, teens a little bit, whatever, that real incomes go up. Are we a more beneficial nation with higher salaries because inflation's coming down?
My follow-up question would be as follows, Tom. Show me your unemployment forecast.
Yeah.
If you're going to show me your inflation forecast and what you think the Fed's going to do, show me your unemployment forecast, which, by the way, makes it tremendously difficult to really project this election, Tom, 12 months from now. Where's this economy going to be in 12 months if we don't really know where it's going to be 1 month, 2 months, 3 months from now?
We're getting to the point, as AMH said, that we're getting the politics to intrude. And Lisa, you know, I guess AMH is right. January sort of kicks that off, but January is not that far away all of a sudden.
I know. And so what is the narrative going to be, and how do you sort of craft a message around
Do we know who the candidates will be? It's assumed Biden, Trump.
I don't think we know.
Happy birthday, Mr. President.
That might change. That might change.
That might change.
Just remember how 2023 started. January, soft landing, right? But we're going to get a recession, but softish, whatever that means. February, no landing. March, banks start to collapse. Banks fail. We're talking hard landing. And then by the end of the summer, what are we talking about? Coming into Q3, Q4.
Goldilocks.
Q3 had GDP growth close to 5%. Yeah, what's that?
Fastest growth in 2 years.
Let's start the data check here. 1 year trailing, Dow up 4%, underperforming. It's only a 14% up year for SPX. NASDAQ 100 up 26%.
There you go.
It's my data check for the morning.
That wasn't consensus at the start of the year, let's put it that way. Equity futures slightly negative this morning. We're down 0.05%. No drama there. In the bond market, yields aggressively lower last week, down by more than 20 basis points to a September low on a 10-year yield. This morning, higher by 3 or 4 basis points, 447.25. Something that does stick, dollar weakness. The euro 109.30. The euro against the dollar positive by 0.1%. Worst week for the dollar index, Tom, since the summer.
Worth watching. Thank you, Jane Foley, for perspective here from Rabobank London here moments ago. Right now, let's get started. Keith Lerner joins us, co-CIO, Chief Market Strategist, Truist Advisory Services. Keith, there are a set of narratives out there. We have to do something with what we have. We have to asset allocate. We have to believe in a strategy. Is there any belief out there in a strategy, or are we going to make it up week by week?
Yeah. Hey, well, great to be with you. There are a lot of cross currents, which is creating all these different narratives. And I think at this point right now, it's not a time necessarily to be either, aggressively on offense or defense. We've been joking around in this program that we were aggressively neutral or strongly neutral. But I will say at the end of October, when we hit 4,100, we said that was a buying opportunity. And I still think there's some left in the tank here before year end after some digestion of these big gains we've seen the past few weeks. But Tom, I think it's going to continue this way early into next year, that we're going to have this broader choppy range, and that narrative will shift from day to day, week to week. And I think from our standpoint, I think there'll be more tactical opportunities like we just saw when things get, too far one way to the upside or downside.
So, Keith, this raises a question for a lot of people in cash. A lot of people listening to this program right now are sitting in cash, 5% yield, all that good stuff. Keith, in 6 months' time, are they happy they've got dry powder, or regretful they didn't go further out along the curve and lock in what's available now for longer?
Yeah, well, listen, I think, we've gone from 5% to 440, so it's a little bit more challenging than at 5. But I do think that people will be happy to use pullbacks to invest. And basically, if you think about this, everyone loves 5% until the market moves up 10% in a week, until semiconductors are up 18%. So our message is use those tactical opportunities, because we think the opportunity to have above 5% gains will happen. The other thing with that statement, Jonathan, is if you look back historically, I know the reset has been very strong, but we went back to 1950. The average 10-year yield has been around 6%. The average cash yield has been around 5%. And the average S&P return has been around 11%. So I think that automatically that 5% is the best place to be just in cash is probably overstated.
Although the time was very different back then in terms of valuations and where they were after decades of zero rates. I am wondering if basically what you're saying is you can get better than 5% in big tech. Is that what you're saying, especially with all of this AI discussion that we've been having over the past 6 to 12 months?
Yeah, we're overweight tech, we're overweight communications. Again, we just had a big gain, so we're expecting some consolidation. Obviously, the big number that's going to drive tech this week is going to be after the bell tomorrow with NVIDIA. But I still think at this point, tech is leadership. It was the last to come down. It came back the strongest. And what's notable is the technology sector just made an all-time high. And on a technical basis, it just made a 5-month high overall to the market. So the old leadership is the new leadership, which is still tech at this point.
Oh, well, I'm going to steal that, Keith. I've been looking for a phrase for next year. The old leadership is the new leadership. Do you think that's royalty approved, don't you think?
How much you want to pay for it?
It's huge. I mean, the royalty is a massive string
$1 a
to Keith
time.
on that. Keith, why is that? Why are we not going to see breadth? Why is the old leadership the new leadership?
Tom, I don't know that we're not going to see it, but we're not seeing it yet. Everyone's trying to force a narrative on what they expect for the market. What we try to do is follow the weight of the evidence, right? And a couple things we look at. We look at valuation, which is a condition, not a catalyst. We look at relative price trends, and we look at relative earning trends. Well, right now, obviously, tech is somewhat expensive, but the earning trends are still much stronger than the overall market as far as forward estimates relative to the overall market. Price trends are still positive. And, we can debate about how slow the economy is going to step down, but more likely the economy will likely slow down from where we've been, which is a strong point. And in that environment, I think investors will continue to gravitate towards these big, diverse, big balance sheet companies that have cash flow regardless. Now, listen, at some point, I'm looking at small caps at the lowest relative price since 2020 or the average stock. But I need more than that. I'm going to be patient, and that means I'm also going to miss the bottom or the top. But if we can get the meat of the move, that's really what we focus on. And again, I'm taking what the market's given us today.
Given everything you've just said, over the next month, 6 weeks, whatever's left of the year, Keith, is the fate of this equity market rally in the hands of the economic data or NVIDIA earnings after the bow tomorrow?
I think this week NVIDIA earnings, but I will say this, Jonathan, the way I look at it is we're having digestion. Just after you had a big Thanksgiving meal, you need some digestion. I think that's likely to happen this week. But before year end, I still think we'll have a little bit more of a push higher into year end, more based on positioning. There's a lot of managers that are underperforming this year still because of the mega cap names, and I think likely to see more positioning move to try to play some catch up before year end.
You mentioned indigestion, and we've been talking about the different narratives, and so I have to bring up this one headline that I saw this morning. Thanksgiving on Ozempic turns the feast into an afterthought.
I saw that.
Was Ozempic simply an afterthought? Is that going to be looked back as just the hype of 2023, or is that going to be a trend that we can kind of eat up next year?
Yeah, I think that trend is likely to continue. I think there's, yeah, well, I think that was pretty. I thought it was pretty good, John.
Thanks, I appreciate that.
Carry on, Keith.
Yeah, thank you. No, I don't think that trend's going to change. I mean, I think the one thing with some of these weight loss drugs, I mean, there's a lot of money in earnings that will flow to the drug companies and away from other areas. So I think we're still early innings. In fact, one of the analysts I listened to recently downgraded a stock for next year. One of these, I think it was Krispy Kreme, and the basis was that it's not even in the numbers yet. So if we start to see next year, I do start to see, believe that we'll start to see some impact on that. I don't think this is a 6-month story. I think it's a multi-year story that has some legs.
Keith, thank you, sir. Keith Lerner of Truist Advisory Services. I think about this so much, Bram. I really do. This economy in America is leveraged to obesity. One of the pillars of this economy is obesity, and all of the economic trends that are built around it. Healthcare, food packaging, et cetera, Now, we threw some mud at the usefulness of Twitter a little bit early this morning. I'll rephrase that. Tom threw some mud at the usefulness of Twitter early this morning. There are still some interesting thoughts out there. And one thought that I read was something that we haven't been talking about. What about pensions? What about retirements? If one of the biggest killers on the planet, particularly in the United States, is heart disease, and we're going to do something big about that and people live longer, what about the financial aspect, Lisa, of all of this? Never mind Krispy Kreme and food and all of that stuff.
That's a great point. Although on the flip side, you could say if people are healthier and they're not going to necessarily be getting dialysis twice a week, then maybe that's actually going to reduce some of the healthcare costs. But I take your point. The implications of people not necessarily having, a third of the public being obese in the U.S. or something, overweight at least.
Let's cut it down here. 529 calories for a slice of pumpkin pie That's with the whipped cream or the ice cream on top. It grosses up at 300 and you cake it out at 5. But the problem is it's one slice of pie. And
How
the
big is your
American,
slice?
well, that's the point, John. That's not that
This
big
is
a
what we're
slice.
talking about.
And the point here is there's people in America, not that I know them, that will have multiple slices of pumpkin pie. You have 3 pieces of pumpkin pie, you know, with a drambuie on the side, and you're out to 1,500, 2,000 calories, boom, just like that.
This feels personal.
It
If
does.
you just join in, welcome. Equity futures negative 0.05%. Yields a little bit higher, up 4 basis points, 447.45 on a 10-year. Do you have that much pie on
Oh,
Thanksgiving?
never. Actually, pecan is where I.
Oh, pecan is where you go.
Yeah, do they have pecan pie in England?
sweet.
Do they do?
It's
Do
too
you have
much
mince
for you.
pie?
Yeah, pink.
We get
I like
2,
mince.
pumpkin, and you say pecan, right?
Yeah, my grandmother, you know, it's all
Pecan.
Oh,
You know, what can I say? Listen, I've been waiting
Pro
for this.
tip, never ever use blackstrap molasses to make pumpkin pie. That's it.
Okay.
That's the pro tip.
Yeah,
Pro
that's
tip
my
there for your cookies. We're going to do
Have you
meatloaf.
made a mistake with that?
In the 9 o'clock hour with John
absolutely not.
Farrow, we're doing meatloaf.
I think I did
quick.
some gingerbread snaps with that.
Yeah,
It worked out.
It works.
Yeah.
Gingerbread is better than pumpkin. It overwhelms the pumpkin.
Okay.
It makes it very unrecognizable.
Did you try and make this last year?
Theoretically, it's happened to some people in my orbit.
It's her cookbook. It's coming out next year.
Amazing.
Down in Flames.
Down in Flames. That is
Down in Flames.
perfect.
Bramo
That is
cooks.
perfect.
100%.
Equities on the S&P, just about negative from New York. This is Bloomberg. From New York City.
In London, in Sydney,
From Washington.
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
He
story.
is there, the kind of upside.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
The Federal Reserve, when they take those uncertainties down to the level of the monetary policy making body I work for, we are not certain about whether inflation is on track to return to 2%. We are unsure about the length of lags and whether they are behind us or still to be fully realized.
And for that reason, they keep talking about patience. That was Mary Daly, the San Francisco Fed president, speaking at the European Banking Congress over in Frankfurt. From New York City, back in America, welcome. Your equity market just about unchanged on the S&P 500. Yields are higher by 3 basis points, 446.66. And a quick snapshot of what's happening in the commodity market, because it's been a rough, tough couple of months all over the place. WTI back in the 70s, 77.40, and Brent crude just creeping back into the 80s over the last few sessions, Lisa, 82.33.
And there's some discussion about possibly further production cuts in Saudi Arabia at the monthly meeting of OPEC Plus. At a certain point, if this is demand driven, do you get a supply side response from some of the OPEC Plus members?
Is that what we're going to see? Cuts, JP Morgan And Malik, over there on the London desk, thinks we will. Christian Malik, Tom, thinks that OPEC Plus are going to make big cuts, anticipating the weakness in the economy that might be around the corner in 2024.
Okay, so that's one of the narratives we have here, and maybe that's the least predictable narrative that we have. I would say many of the narratives are migrating towards our uncertainty on oil, the microeconomics of what the stock market's going to do, what technology is going to do, what nominal GDP is going to do. To me, I don't even know where Atlanta GDP is right now. But to all of these things, John, are we any less confused than we were 12 months ago when you were saying, wait for the outlook till March?
No, I don't think we are at all. Tom, at the start of October, we have the terrorist attack in Israel. We're talking about maybe a conflict spreading through the region and crude's going off to the moon. Crude was down 11% in October. I keep going back to that. I say it a lot. We've all said it before. If you want to make a fool of someone, ask them for their forecast, Tom, on oil. And October made a fool out of everyone when it comes to the commodity market.
We're gonna have to see. Right now, can we do the foreignness of it all?
Sure.
I'd be honored to do this. I do this for my good friend, David Gura. There is no perception to what 1975 was. It was when a governor from Georgia wandered up north, delusional that he could actually win an election. At the same time, Ricky Skaggs, Tony Rice, Jerry Douglas, and others were doing a seminal album in bluegrass, J.D. Crowe in the New South, 1975. Terry Haynes remembers this. He remembers the shift of the Old South to the New South. In honor of the First Lady, Terry Haynes, what was the battle that the two Carters had when they invented the New South?
Well, the battle that went on was the idea, and this is middle Watergate, post Watergate, the idea that an insurgent could actually shake up Washington. I mean, that was the selling point for Carter. He managed to make that case. He won by a little over President Ford, but then he ran into the realities of Washington, where Tip O'Neill and others took him aside and said, no, actually, this is the time where we get to make the policy and you get to sign the bills. And what ended up happening was basically a 3-year Democratic food fight that weakened Carter greatly, not least because Ted Kennedy ran against him, and that ended in President Reagan's election.
Is this Democratic Party now any shade or idea of what the two Carters knew?
Yeah, some of them are, but I think that President Carter would likely be unhappy with the progressive direction, largely because, I mean, he would be aspirationally progressive, but the idea that, they couldn't win on a particular platform would not be helpful. And he'd see the politics, I think, very, very differently than the current group does.
Who do you think, Terry, is going to be the torchbearer for the Democratic Party in the next 4 to 8 years?
Beyond Biden, I mean, there's going to be a lot of people that are going to fight that out, from Governor Newsom to Governor Whitmer of Michigan. There will be 4 or 5 others that will try to pop up. It's going to be very interesting, the battle for the soul of the party. The problem is relevancy. What you've got on the left and on the right is a world where the primary system rewards purists, and at the same time, the money out there, the money and the energy rewards purists as well. So there's a huge middle in the country that feels unserved on a lot of levels. And I think that's the basis of a lot of the tensions you see politically.
Do you think that's the reason why President Biden hasn't stepped down and allowed somebody else to run in his stead?
One reason, yeah. I mean, but, Democrats are, the old order never passes quietly. I think historically. And what you've got is in Biden is by and large the old order, somebody who got there on the promise of centrism, of a return to normality, and then what you've got instead is the pull and tug between the centrists and the progressives, and that's not the direction the Democratic Party's going in. They're going for good or ill in the progressive direction.
Terry Haynes, who's the Nikki Haley of the Democrats right now?
Nikki Haley, goodness, there isn't one on the radar screen. Everybody else who's thinking about running went independent. Whitmer is probably the closest to that, but I don't think there's a close analog.
When you talk about President Biden and some of the poll numbers recently, I'm wondering, given the foreign policy consideration, how much is the lack of popularity going to drive some policy decisions on his part in the coming months? In other words, does it reduce his support of Israel and change any of his Middle East policy?
I don't think it changes on Israel. I think he gets a little bit tempted on China. The Chinese have been dangling a great deal that, if you could be a little bit more reasonable on Taiwan, we'd work with you on the Middle East. We'd work with you on Russia, Ukraine much more overtly. And, so I think he's a little bit tempted in that direction. But, the way the White House sees this, and I was following your comments earlier, the way the White House sees this fundamentally is, it's a race against somebody, and they think that people will end up reluctantly pulling the lever, but actually pulling the lever as much to avoid the likely opposition as anything else.
Terry, do you think China would be happy with another Biden term?
Happy? Yeah, I think sure, because what China very likely sees is a lot of muddling through, a lot of pronouncements about new policies, chips, security, and the like, but not a lot of follow through. I mean, there's a headline on the South China Morning Post this morning saying, America's building all these chip factories, but the federal dollars haven't started to flow, which is true. And, that's been a year or more after the CHIPS bill was passed. One of the things that the United States has got in terms of a large problem is follow through, is procurement, is actually becoming the arsenal of democracy here at this particular point.
Terry, appreciate your insight. Thank you, sir. Terry Haynes there of Pangea Policy. Going into an election year, Tom, next year, China and the United States trying to just dial back things in the last week or so.
Well, they have, and you wonder what the next step is, and I would suggest one of the steps, and I'm going to defer to someone as competent as China Beige Book on this, Leland Miller, but I wonder if the surprise here is domestic consumption. Lisa, you mentioned this 2 hours ago. Maybe you do get some domestic consumption away from the collapse of investment in China, and I'm not talking about 7-8% GDP, but just get it out to a 4.8 or a 5%, and maybe that's happy land.
I can't game out what's going to happen in China or even what's necessarily going on in China. I can say what was clear to me last week was that the leverage seemed to have shifted in a material way. There was a new tone. The acceptance of China, we talked about the dictator comment, it got completely lost. It was pushed away. It was irrelevant. China could have taken that up if they wanted to. They decided not to. It shows how much more maybe they need U.S. business interests. Maybe than they ever have before.
Got a standing ovation from corporate America, didn't he? Isn't that more important to him than whether he's called a dictator or not by the President of the United States?
Absolutely. Whether that standing ovation translates into dollars,
true.
It's a bigger, perhaps, their hurdle.
They all want to be there still, though, don't they? They want to see certain changes, but they all want to be there. They all want access to that market.
It's the world's second biggest market.
But over the weekend, Robin Brooks really led on this. It's not China-U.S., but maybe it's China stuff through Mexico, then the stuff from Mexico up to us. Have things really changed all that much from that pier across the Pacific? Yes.
Coming up in the next hour on Bloomberg TV, Russ Kostrick of BlackRock, Brian Weinstein of Morgan Stanley, Nadia Lovell of UBS. That's your lineup going into the opening bell and coming out the other side. Equity futures on the S&P 500, totally unchanged. From New York, this is Bloomberg.
shocked. I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Bloomberg Surveillance on radio and television. Thank you for being with us on a Monday. What a weekend, just many different narratives to talk about. We've really tried to check all the boxes this morning to get you ready for a holiday lengthened work week. Right now, an important tweet out on OpenAI. Lisa and John, you know, we're sort of like, okay, can we move on from the Silicon Valley soap opera? Except this tweet is important. Moments ago, truly one of the foundational engineers of AI, Ilya Sutskever, he is at OpenAI over the weekend. Within the simplicity of this, Lisa, it was him against Altman and the rest. He stayed with OpenAI. I deeply regret my participation in the board's actions. I never intended to harm OpenAI. I love everything we've built together, and I will do everything I can to reunite the company. To me, that's the driving news item since Mr. Nadella shocked us at 2 a.m.
Does this mean that Microsoft is going to buy OpenAI outright to unite the team, or does this mean that they're going to bring back people that they lost? Unclear. It is clear, though, that Microsoft was the one that seemed to win here, and right. OpenAI is left scrambling.
Look for Bloomberg Technology today to drive this. If they did like all-nighters, like for, you know,
a long weekend
days.
For many people.
Long weekend, particularly to Ed Ludlow there, and we'll get much more on that through the morning as well. Microsoft with a lift here this morning. It was up 10 big figures, way out over record high. Microsoft has pulled that back a little bit in the last number of hours, but still 371. Not all that shabby. No, that's shabby as well as the work week of Michael McKee. After the Denver Broncos won by 1 point over the weekend, McKee's a happy guy, and he gets to a staggering Wednesday of economic data. Where will we be, Mike, Wednesday at 8:31 a.m.?
I'll be on holiday, but I don't know. That's going to be the interesting question. We've seen the yields across the curve fall for the last month, and particularly since the last Fed meeting, and then we had the jobs report and CPI. Do they change much this week? Probably not. This is the week that a lot of people go on holiday, particularly the senior bond traders will probably be gone on Wednesday and Friday. So do we get the kind of reaction we might ordinarily get? Don't know. Wednesday, we get jobless claims and durable goods orders. Those ordinarily would move the market somewhat. We'll see if there are going to be enough people trading to have an impact. And Tuesday, people are going to talk about it being the highlight of the week, the Fed minutes. Whether the Fed minutes answer the questions that people want to know the answer to, like how long you're going to keep rates high, is kind of unlikely, but it is going to be something the markets are going to pay a lot of attention to.
Oh, my God. Tom, have you ever heard a less excited Michael McKee try to give us the week ahead? This isn't going to matter. No one's going to be around to trade this. And, oh, yeah, this is going to happen. Let's see if they don't answer anything. To the Fed meeting minutes point, though, Mike, are we going to see some sort of pushback against this enthusiasm about a soft landing? That's sort of one of the speculations, that maybe we'll get some massaging of the minutes to that degree.
I'm not sure. Most of the Fed officials that have spoken since the last meeting have suggested that a soft landing is a possibility. They don't want to say it's going to happen because they don't want to be wrong, but they're beginning to think that it is a real possibility. I'm not sure there is anybody who's going to be saying it's less likely or that we're more likely to have a hard landing. Really, the question is going to be, do they need to raise rates again?
Yeah.
Because we have seen market rates fall somewhat, and we don't have that financial conditions tightening that we'd had before. So I think that's going to be the key question that people in the markets want to know.
So let's park that for a minute and just go to 1 p.m. today when we get that 20-year auction at a time of maybe thinner liquidity, at a time of a lot of volatility. How disruptive could it be?
It could be a little bit disruptive, more psychological than anything else, in that the 20 is not as liquid and deep as the other issues along the curve. But we had the issue with the 30-year last week tailing badly. And so is there a market for duration out there? And if so, what's the price? That's what people are going to be interested in. And we'll be looking at to see just before the auction where the when issued price ends up, because are people going to start to make concessions to try to get this auction through much more smoothly?
Mike, we got to leave you, because if we don't, you're talking auction talk. Bramwell will be going auctions here for the next 5-6 minutes. Michael McKee, waiting for the 20-year auction. Is it today, Lisa?
1 p.m., $16
1
million.
p.m. McKee will be on bated breath for that. I'll be deep in the surveillance now. Joining us now to save the segment, Kathy Butz-Johnson joins us, Chief Economist, Nationwide Mutual Insurance. Kathy, if I take the movable feast to real GDP and some form of inflation expectation, what nominal GDP describes this idiotic phrase, soft landing? 4%, 5%, 3%? What animal spirit is a soft landing?
Good morning, Tom. Very good question. You know, we do tend to focus on real GDP growth. I think soft landing for the Fed's view would be, you know, getting growth below, 2% for some period of time. But then if you add inflation on top of that, you're looking at nominal growth that needs to slow, probably, certainly below 5%, maybe even 4, around a 4% handle.
Is that feasible?
Oh, it's certainly feasible. I think we saw the real strong blow-off of consumer spending and activity over the summer. It did persist through September, but the October data are signaling, some real slowing and changing in employment dynamics, income, and also that's going to, and consumer spending. We got resale sales, and we'll see the consumer spending data next week, that we are seeing some slowing and moderation. And I think the question is, are we going to have a soft landing, hard landing? That's still there. But I think to the point you were talking about earlier, the question has shifted really to whether the Fed has to raise rates further. And if not, when do they start to cut rates and how quickly? That seems to be where the dialogue has shifted.
I am lost on this. How do they, quote unquote, raise rates into a 5% or lower nominal GDP? Dare I say it's 3.9% animal spirit. It's not in the textbooks, Kathy. You don't raise rates.
Well, we think they're done. And we would agree with you that if we're right and growth moderates, and really what we saw third quarter, nearly 5%, that was eye-popping. But inflation still continued to trend lower, right, even during that period. But I think that period was the revenge spending. It was, depleting the remaining part of the pandemic savings. And the labor market was very, very strong. It's still strong, but you're seeing some of the robustness kind of cool, or some of the heat cool in the labor market. I think they're going to hold it. And I actually think the market's moving in the right direction, in that by May or June, they'll be able to cut rates. It'll be very gradual. Typically when they cut rates, they're very quick in cutting rates. This time should be slow, but we still think, by the end of the year, you could get a 4% Fed funds rate. Market's pricing in about 4.5%. So there's still room for the market to price in further easing. And even rally a bit along the curve.
There's a real key question, and we've been asking it all morning, about what that implies for the economy. Whether a 4% Fed funds rate and more aggressive rate cuts implies also an unemployment rate that has ticked higher, materially so, given some of the uptick that we've seen and expect to see in initial jobless claims on Wednesday. Do you think that there is a nonlinearity to what comes next in the labor market?
Yeah, great question with the unemployment rate and what's happening in the labor market. I mean, we do think the unemployment rate is going to move higher, but we see a mild recession. We see the unemployment rate only going up to about 5%. We think it's largely linear. And the reason we don't see it to be worse is because you don't have the overhang of corporate indebtedness, and the household balance sheets are still really good shape. I mean, the real issue here is that demand outstrips supply, and we had inflation, right? So the Fed's got to cool inflation. If that continues, I don't think that we have to have a deep recession, and we may even get skirt by with a soft landing. We're not as confident about that, but you don't see those typical large imbalances that would signal a deeper recession.
Michael Darda was talking just a couple weeks ago about how when you get a 0.5 percentage point uptick in such a short period of time in the unemployment rate as we have gotten over the past 6 to 8 months, never in history have we not gotten a more nonlinear shift upward in the unemployment rate in a recession. How hard is it to say this time is different?
Well, you always struggle to say this time is different because we've been through so many cycles, and there's a lot of similarities. So, part of what's happened with the increased unemployment rate is because supply is risen. So it's not necessarily a bad rise in the unemployment rate, and it has been very gradual. And the supply has really come surprisingly through increased immigration. Half of the rise in labor force has come from increased, immigration. So, I'm just a bit more encouraged that the Fed can kind of pull off, even if we get the mild recession we're looking for, I think the Fed declares victory on that. Now, I'm not in the camp really that we have to see this, nonlinear increase in unemployment. So this time it is different because there aren't the same imbalances that we have in place. Again, it's mostly an inflation issue that we're dealing with. Now, the one thing I would say is rental inflation. We all took for granted that was going to slow and roll over. Our own home, rental inflation models suggest, based on real-time measures from Zillow and CoreLogic, and also home prices at Lead, that rental inflation should come off. There's where, we got encouraging numbers in October. I hope that continues. But when I look at the other look at inflation in the core services, it's really transportation services. Other readings have come down quite nicely.
Kathleen Buzz-Johnson, thank you so much. With Nationwide, they're on something we're really focused on. Of course, in New York, it's a mess here. We've got a 3-zip code reach, and the 3-zip code reach is bidding wars for houses and rentals that are scooped up within hours, I would say. What you're hearing from Ms. Buzz-Johnson there in Columbus, Ohio, is a little bit different, to say the least.
And this is the reason why it's been so difficult to get a handle on it. How do you deal with the fact that there are many tiers of people who have different experiences, and you're seeing that playing out in some of the retailers as well?
Well, let's do some data check right now. And really a churn to the market, red and green. We had some green on the screen, then red on the screen. Now it's just flat out a churn with the SPX actually flat here into trading. The VIX expands out to 14.13. No big deal, but I got a yield back up, 4.90 on the 2-year yield, 10-year yield 4.47. Oil here, $78 a barrel. It's a churn here on a Monday, maybe towards the wall of economic data Tuesday and Wednesday. The Standard & Poor's 100, it's flat, down 0.01%.
Yeah, basically not moving. I really think that this Javier Milei, the Argentinian president now that just got elected, I think that's fascinating. Just reading some of his comments, some of them that I can read on air. One of them, just after he won, today starts the rebuilding of Argentina. There's no room for gradual measures.
I'd go with the analog of Liz Truss. We're going to have to see. It's not Britain. I get that. I don't pretend to be expert in it. We've got Patrick and the team in Buenos Aires is really one of our great Latin American teams. They'll have a lot of reporting on this, but Yeah, have we heard this before? I think so.
This is somebody who is rather bombastic in many of his comments. I just think it's interesting when you have someone who's going to throw away the currency, throw away the Ministry of Health, throw away the Ministry of Education. It's what do you have left? How do you do this?
Can I give you my theme for next year?
Please, I've been waiting for it.
I stole it from Lyle Brainerd. She whispered to me on the White House Correspondents' Dinner. It's a cumulative 2024. And I say cumulative 2024 because the obvious thing is the inflation we're all feeling. And maybe it's going to be all of those trends accumulating across 4 years to a presidential election late in 2024. But to me, the heart and soul of it is the stock market and all the gloom out there. Pre-pandemic, 4 years back, 3108 to 4514. We've got a cumulative 45% lift in the stock market, and nobody's celebrating.
You know what I am going to have as my theme, and I stole this from a New York Times writer, automated capitalism. This idea of all the fees that we're paying to all the different streaming and other subscription cultures.
There. Netflix sent me a love note, $22 a month this weekend.
I'm sure quite a love note.
They said, good news. It's good news I can use.
The reception, the acceptance of Purosangue has been extraordinarily high. We had to stop the order for a while because we had to understand how to manage the supply chain. So there is a strong traction of Purosangue all over the world.
How much do you worry about increasing production and therefore becoming, I guess, less high-end luxury?
We are making 13,000, 14,000 cars per year. We will not grow a lot in the future because we want to grow more for value, not for volume. And maybe one number, you know how many cars Ferrari did we put on the road since the beginning, since the first one? 250, 260,000. So 250,000 cars in a market where there are million and million of cars every year.
So we get to ride in an Uber with the Uber CEO.
Yeah, that'd be pretty cool.
Come along with me, Emily Chang, as I ask tech leaders of today what makes their businesses future ready for tomorrow.
You're an expert.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
I think it's important to remember that there are other sources of foreign direct investment, and the U.S. is, of course, an important one, but China has other partners that they can turn to. So there is leverage here, but it is not it's not limitless leverage. But I think that China is looking at the U.S. political situation and sees lots of potential for things to shift come this time next year.
Hinting at the election cycle and all that can come with it, Anna Ashton, Director of China Corporate Affairs and U.S. China at Eurasia Group, talking after last week's confab with President Biden and Xi Jinping. At least they resumed communication, and a lot of people saw that as a win. Right now in markets, very much range-bound as people take a look at a quiet, shortened week from the Thanksgiving holiday in the United States, but sanguine. Tom, I would say that that's really the mood. We are seeing a stability with 10-year yields barely moving up just 3 basis points, and S&P futures basically flat.
Yeah, I agree. It's a churn to the market, and we're going to squeeze it all. I could say a holiday lengthened work week because that's what it feels like in the media. But we're going to squeeze it into a Wednesday data dump. Michael McKee will help us with that. But my head's spinning as much as it was 12 months ago. I mean, it's the times we live in.
I would agree. I just want to highlight 2 names that we really have been focused on throughout the morning: Microsoft and NVIDIA. Microsoft having given up a lot of the earlier gains after saying that they had hired Sam Altman to to head an internal AI kind of program from OpenAI after he was ousted as CEO. Interesting to see the give back, especially after those comments of the chief technologist and talking about uniting OpenAI. NVIDIA to report earnings tomorrow, and those shares still up near record
And
highs.
I said last week, I don't give a damn, except I do. All of a sudden, NVIDIA, you know, forgetting about the festivities this weekend, it's a big deal. Mohamed El-Erian with us Friday. Bramo off, El-Erian agreeing to sit in, attempt to substitute for Lisa Abramowitz. And he was busting my chops about an essay to come out. It came out this morning, Mohamed El-Erian, on FedSpeak. Is there too much FedSpeak? This is an important question.
He says, yes, there is too much FedSpeak, and you should read it. It's a good column. I was reading it earlier. It's really a top-notch piece of thought.
Full disclosure, I'm a member of the Council on Foreign Relations. I can't say enough about his public service back well to World War II, starting with the Kennan essay and other great moments along the way. And I remember, I'm going to say 15 years ago, when the CFR, the Council on Foreign Relations, had the courage to reinvent themselves digitally. It is one of the greatest successes in anything we do, this in international relations. The website of the Council on Foreign Relations, which is the foundational intellectual input of Richard Haass. So what do you do when Haass exits? The joy is it's Michael Froman, president of the Council on Foreign Relations, to say he's former U.S. trade representative, barely describes the miles he has clocked on airplanes for this nation. Michael, just thrilled you could join us this morning. Congratulations on the new effort with the Council on Foreign Relations. It's a little busy out there, Michael. What are you focused on right now?
Well, we see the return of great power politics with Russia at war, the emergence of a competition, multi-dimension competition with China. And of course, you've got the war in the Middle East breaking out and global issues like pandemics and climate change still to deal with. So there are a lot of issues on the global agenda, a lot of demands for cooperation and collaboration, precisely at a time when there's also a lot of fragmentation. So it's a very challenging period.
There is a bipartisan tone to the Council on Foreign Relations in this new Foreign Affairs magazine, your work with President Obama. There's Mr. Gates, Secretary of Defense, with an important essay in your Foreign Affairs magazine. Is it a bipartisan debate in Washington, or is our politics so fractured we're not having a normal CFR debate?
Well, clearly the country is more polarized politically than it's ever been. I think when it comes to foreign policy, national security, there is a bit more of a nonpartisan or bipartisan debate going on. The center left and the center right, I think, share a fair number of perspectives. And of course, then there are a wide range of perspectives from in both parties as well. But right now, whether it's Ukraine or the Middle East, I think the majority of both parties are very focused on providing the necessary support. And when it comes to an issue like China, there's a very strong bipartisan consensus that we need to be very firm with China and reset the relationship.
Focus on that, Ambassador Froman, just taking a look at what happened last week. Do you think it truly was more of a success than maybe many people are giving it credit for?
I think it was a success in that the goal was to stabilize the relationship heading into 2024 when you have elections in Taiwan and elections in the United States where the China issue is clearly going to play a role. And I think they both achieved that in terms of not just talking, because we shouldn't confuse a meeting or a conversation with actual progress, but they did make actual progress on issues like military-to-military conflict management, on fentanyl, on climate change, and on really trying to reset the relationship going into next year. So President Xi gave a speech in San Francisco, which frankly could have been given 7 or 10 years ago. There was no wolf warrior diplomacy in evidence. There was no reference to the challenges and conflicts that have defined the relationship over the last few years. And I think there's a real effort on their part, for their own reasons, that the Chinese want to make sure that we have a more benign international environment looking ahead.
They want the appearance when it comes to the business climate, but there's a real question about how much that really carries through. There was a lot of discussion about them buddying up with Iran, as well as North Korea, and particularly siding with them with respect to certain issues in Ukraine, as well as in Israel. Today, Chinese delegates are meeting with Arab nations to try to discuss what's going to happen in Israel. Do we have a sense of where they stand on this, of what they are going to argue for?
I think China is trying to figure out what its global role is beyond economics. It did play a role in witnessing the normalization of relations a bit between Iran and Saudi Arabia. That was a limited agreement around not bombing Saudi oil infrastructure. It has offered its help in Ukraine, but given the fact that it has a friendship without limits with Russia, that help is not being particularly welcomed by the Ukrainians. And in the Middle East, of course, I imagine the parties in the region will be seeking out support wherever they can in capitals around the world, including in China. I think to the degree that they can play a constructive role, of course, it should be welcomed. But that means really playing a role in providing a public good that they've never really done before. China's been amazingly disciplined about pursuing its national interests narrowly defined. And if they really want to be a global power, then they also have to help provide for some of the public good.
Michael, you are more identified with TPP than anyone I know. The failure of Trans-Pacific Partnership, something you worked on. The fact is we are deploying 4 military bases to the Philippines, 2 in Cagayan, Isabela, and that long skinny island down towards the South China Sea, Palawan. Is our military doing TPP for us? Is that the actual TPP? Is the military expansion of America to the Pacific Rim?
I think one thing that's clear is that the more that China asserts itself across the region, the more the countries in the region want the U.S. to be present and engaged. And they're looking for our engagement in a military security sense, in a political dimension, but also in an economic dimension. This is the most economically dynamic region of the world, and they desperately want the U.S. to be engaged there, not just as a military power, but also as an economic power.
Michael Froman, again, congratulations, new duties at the Council on Foreign Relations. He's the president of the CF. Lisa, as the world, I feel like it's a soap opera. I feel like it's not like General Hospital. It's not like Luke and Laura. It's more like As the World Turns. Wired magazine, with their good authority, they are always out front here. Lisa, you can't make it up. OpenAI staff threatened to quit unless board resigns, and the key thing is 500 employees.
Which is the reason why people are wondering what's going to happen. And then that tweet that you were talking about, that X post saying
from
that,
Ilya,
like and Suskever basically saying he will do everything in his power to reunite the company. What that entails, given the fact that Sam Altman and Greg Brockman have been hired by Microsoft, is another question.
Yeah, here he is. I deeply regret my participation. We did this before. I can reunite the company. Here's the verbatim from Wired. This is all happening in real time. Folks, control room scrambling here this morning. In their letter, the OpenAI staff threatened to join Altman at Microsoft. Quote, Microsoft has assured us that there are positions for all OpenAI employees at this new subsidiary should we choose to join.
This is basically Microsoft not acquiring OpenAI, just simply stealing the employees, right? I mean, they were basically talking about what this will look like.
As the world returns seconds ago, look for this in the 9 o'clock hour. Citigroup cuts more than 300 manager roles as part of restructuring. It's a busy Monday. Stay with us on radio and television. Good morning.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
What do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
Have you thought maybe I should go do something else? I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
This is Bloomberg.
Let's get your trading week started. Live from New York City this morning. Good morning, good morning. 3-week winning streak on the S&P. 4 days of gains coming into Monday. Your equity market just about positive. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Ferro.
Live from New York, coming up, equity markets on a 3-week winning streak. Argentina has a new leader, it's Libertarian Javier Milei, and attempting to explain a weekend of confusion at OpenAI. We begin with the big issue, narrative ping pong reaching an inflection point. Joining us now to discuss is BlackRock's Ross Kostrig and Morgan Stanley's Brian Weinstein. Brian, let's begin with you, buddy. On Tuesday, a week ago, it was soft landing Nirvana. A few days later, we were discussing a hard landing. What's next?
Oh gosh, I don't know. The narrative, as you say, ping pong's a great way to speak about it. Listen, I just think we won't know for a while, right? I think the data has been stronger than people expected it. We keep waiting for the impact of Fed rate hikes, and also not just the Fed, other rate hikes to pick up, and we haven't seen much of an impact. Listen, soft landings are unusual, so I think we do have to look for signs of trouble, but I don't think those signs are emerging in the next couple of weeks or maybe even month or two.
You mentioned the data. Let's go to the data. Later this week on Wednesday, you'll get jobless claims. Jobless claims for us are climbing, but from exceptionally low levels. Are you focused on the levels still or the change?
I think it's both, Jonathan. But, again, I think that there are a number of factors this cycle that are so different. You always worry about saying this time it's different, but there are important differences that you have to keep note of beyond just the normal cyclical indicators. One of which, particularly on the labor market, we lost millions of workers during the pandemic and the immediate aftermath. Not all of those have returned to the labor force. There's still several million workers missing from hospitality, from nursing, from healthcare, from education. As those come back, as the supply of workers increases, that's creating a different dynamic for the labor force versus the typical one where you count a certain number of months and you expect jobless claims to surge. That has not happened this time. The other thing worth noting is we didn't have a number of the imbalances, that typically precede a recession in 2020. The consumer balance sheets are still in relatively good shape. We saw a massive deleveraging in the 10 years ahead of the pandemic. So again, I think this creates a different dynamic that some of the typical rules of thumb that you follow, you've got to interpret them a little bit differently this time.
So, Brian, that makes it really difficult, as Russ suggested, to interpret the incoming information and understand maybe, Brian, the difference between an unwelcome deterioration in the labour market and a welcome loosening in labour market conditions. What is the difference for you?
It's a very fine line. And again, it's unlikely that the Fed, in moving rates at 25 basis points a clip, has managed to hit the perfect level at which jobs just enough. And by the way, this is a crazy thing to say. Enough jobs disappear where that's okay. It's not usually the way it works, right? What happens is you get a little bit too tight, and then the ball starts to roll, right? We haven't seen defaults in the larger parts of the credit markets, but if you look at small businesses, people are struggling, right? So I do think the signs are there for a more traditional. Doesn't have to be a hard landing, but at least a landing, right? Where you do have trouble, you do have imbalances, you just don't know where they are yet. But as Russ said, it's taking a little while to get there, and I think it takes a little while longer still.
This is important for how the market responds to that incoming information, Russ. So let's build on this a little bit more. If you start to get that welcome loosening in labour market conditions, maybe yields start to fall, and equities off the back of that start to rally. I guess what I'm trying to ask here, Russ, as the bond market rallies, and if we continue to see a fall in yields, do we get to an inflection point where that is no longer constructive for equity markets, that we have to start to think about why yields are falling so much?
I think that's a fair question. I don't think we're there yet, but you're exactly right. If yields are falling because there's some optimism that inflation's moderating, that's good for most risky assets, including stocks. If yields are falling because people are significantly downgrading their expectations for 2024 growth, well, then at some point, earnings estimates are going to go down as well. So again, the notion of this soft landing, this Goldilocks, is predicated on the notion that the economy slows enough that inflation is no longer a threat, but not so fast that you undermine earnings growth. And I think that's what investors will start to look to in 2024, which is, as the economy slows, is there enough momentum? Is nominal GDP strong enough to support the type of earnings growth that's been discounted into estimates and the market?
So let's start with the bond market. Check out what's priced now. The 10-year at about 450, 447. We were down more than 20 basis points last week on a 10-year maturity. 2-year out to 30-year, whole curve shifts lower. Michael Hartnett at Bank of America tries to make it simple, maybe too simplistic. You can answer this one, Brian. He says 5% to 4% bond yields, bullish risk, easier financial conditions. He says 4 to 3, you start thinking about something different. Bearish risk, recession. Is that how you'd frame it, Brian?
Yeah, I think there's two pieces to it, right? I do think if you got the long end down below 4% meaningfully, given the fiscal situation that's been well discussed, something bad is happening out there, right? Inflation expectations are falling, growth is probably cratering. So I would agree with that. I think the other piece to think about is the correlations between stocks and bonds have been positive. In other words, if you told me the S&P was down 5% this week, I would guess that yields were higher. So I do think you should consider a world where 2-year notes go towards 4%, but the long bond goes maybe towards 6% or 5.5% at least. That's where the danger zone is, I think, for the economy. A really steep yield curve where the long end finds a new clearing level, and there I think stocks could be lower and bonds do okay, but very specifically depending on where you own them.
Brian, to be clear, is that your base case or just a risk for next year?
I think it's a risk, right? It's hard. It's a strange move. It doesn't happen very often. But if you ask me what's mispriced on the yield curve, now it's the long bond, right? The spread between 10s and bonds is, I think on your screen a second ago, 15 basis points. Historically, unless we have no deficit or unless the Fed is actively tightening, over tightening, that spread could be 80, 100 basis points. I think we're going back there.
Russ, given what Brian just said, what have you been doing with your duration underweight over the last few weeks and months?
We've actually, over the last, what's called 6 months, we've been getting closer to benchmark. We're still a little bit underweight duration, and that is more reflecting our supply concerns and issues in the long end of the curve than in the short and the intermediate. We've actually been buying back short-term paper. We've been buying back the belly of the curve. And again, I think the issue on the 10 and the 30-year is less about the strength of the economy. It's probably going to be less about inflation going forward. It's more about what is the right term premium in an environment where you're running structural deficits of $1.5 to $2 trillion, and are investors being compensated enough to take that duration risk in an environment where supply is elevated and there's been some shift in the demand function. Clearly, central banks are not buying the way they were. They're trying to reduce their balance sheets. And we've even seen a shift in buying patterns from foreign actors as well as U.S. banks. So that's where I think you still have to be a little bit cautious, is the long end of the curve, again, mostly around supply.
So getting closer to benchmark, but still slightly underweight, but adding duration. Can you tell me what you've been doing at the same time, Russ, with equity risk? Have you been adding to equities as well? Can you explain why?
We have been adding to equity risk. And again, I think it goes back to this narrative that we're all talking about, which is, can you get the soft landing? If we have an environment, and I think the framing of about 4 to 5% as being positive for equities is probably fair, where inflation's moderating, rates are moderating, rate vol is down, which I think is also important, but you've got an economy that's growing, let's say 2% in real terms, 4.5% nominally. That's a decent environment. It's one where multiples can probably hold in there. It's one where your earnings expectations, you can expect, high single-digit, low double-digit growth in S&P earnings next year. And that's probably an environment where you can lean a little bit more to equity risk. So, again, we haven't been going out looking for, small cap names. We're really trying to focus on our stable growth names, thinking about some of the tech stocks that got beat up back in the fall and the late summer, and adding high-quality names to the portfolio. That's where we've been adding back over the last month or two.
Equities positive this morning by 0.1% on the S&P. We're about 22 minutes away from the opening bell. Tons of data this week. You get it on Wednesday. Jobless claims, some Fed minutes in the next 24 hours as well. Mike McKee has the breakdown for you. Morning, Mike.
Good morning, John. Well, the question is going to be not just about the data, but who's going to be there to trade it, because it is a holiday-shortened week, and Friday there's an early close in the bond market. So as we proceed along, is there going to be a lot of movement by the time we next meet on Monday, a week from now? Leading indicators today, they've been negative for 18 months in a row. We haven't had a recession, so not sure how many people are going to care about that. 20-year auction will get some attention given what happened with the tail on the 30 last week. Then Tuesday, the Fed minutes, perhaps the highlight of the week. Wednesday, jobless claims, they move it up a day because we have the holiday on Thursday. Also, durable goods. Thursday and Friday, we have the parade, the turkey, and football. And I note, John, I put American in there because I didn't want you to get all excited about what we call soccer. And then Friday is the big shopping day, Black Friday. Now, normally, Black Friday is not what it's cracked up to be. It's not the biggest spending day, and it doesn't make or break retailers for the season. But you look at this is the Visa spending index, and they track the velocity of spending. And basically, we are now below where we were in the pre-pandemic era. So are consumers going to really spend for Thanksgiving? That's one of the things that will influence the market when they get some reports on this next Monday on how people spent over the weekend. It won't be dispositive of the whole quarter, but it will give people some sort of indication and something to trade on. The other obviously big thing is the Fed minutes, and the questions are what we will learn from the Fed minutes about inflation, about the rise in market rates and the drop again in market rates, and how long they're going to hold rates unchanged. But probably we won't get any definitive answers there either. So a lot to keep an eye on. But it's going to be interesting, as I say, next Monday to see whether we've really moved the needle at all in any of the markets.
Classic Mike McKee. Highlight of Mike's week, Fed minutes. Not Thanksgiving, Fed minutes. Mike McKee, thank you, sir.
I like Thanksgiving.
Good. I'm pleased you do. Russ Kostrup, Brian Weinstein back with us for a final thought on this. Russ, highlight of the week, besides Thanksgiving, what is it for you?
I think it's going to be probably tomorrow, the NVIDIA number. I mean, clearly, this is still a market that is very much driven by the Magnificent Seven. It's been very much driven by mega cap tech. So this is going to be a big number in a quiet week that I think everyone's going to be watching.
Yeah, I was wondering, Brian, whether it's going to be jobless claims on Wednesday or whether it's NVIDIA after the closing bell tomorrow. One's important for the economy, the other much more important for the market.
Yeah, well, listen, as a bond guy, I was going to go with the first Friday football game, so it must be NVIDIA. I don't think it's a big week for bond market data. We're not going to learn a ton. People are tired. The stories are a little bit old. We need some time to digest. I guess a good Thanksgiving theme there to digest and watch some American football.
Agreed. Jen, stick with me. More to discuss. Russ Kostrup, Brian Weinstein sticking with us. Going into the opening bell, about 18 minutes away. Equity futures just turning a little bit higher, up by 0.1% with some movers. Here's Abby.
John, beneath that very benign surface, we do do have some outsized movers, starting out with the shares of Microsoft. They are popping on the news that the company has named Sam Altman CEO of a new AI unit. This, of course, after, and now the stock is flat. It had been higher earlier after Friday's ouster from OpenAI. Microsoft is still committed to that partnership. Some volatility there, uncertainty, I suppose. Bristol Myers Squibb down 4.6%. A blood-thinning drug failed in a late-stage trial, potentially endangering $5 billion worth of revenue for that drug. Investors not liking that. And then take a look at YPF Sociedad, the Argentinian ADR, on the election of Libertarian Javier Milei as Argentine's new president. ADRs are popping all across the board. It'll be interesting to see the change. And one strategist is saying that it is unlikely that this company will now be privatized. That ADR up 29%, John.
Abby, thank you. More from Abby around the opening bell. Coming up on this program, Argentina electing their new president.
Hoy se termina el modelo empobrecedor del Estado omnipresente, que solo beneficia a algunos mientras la mayoría de los argentinos sufren. Hoy se termina la idea de que el Estado es un botín a repartirse entre los políticos y sus amigos.
Libertarian outsider Javier Milei promising a radical makeover to Argentina's economy. That conversation up next.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Hoy se termina el modelo empobrecedor del Estado omnipresente, que solo beneficia a algunos mientras la mayoría de los argentinos sufren. Hoy se termina la idea de que el Estado es un botín a repartirse entre los políticos y sus amigos. Hoy se termina esa visión de que los victimarios son las víctimas y las víctimas los victimarios.
Libertarian outsider Javier Milei promising radical changes for Argentina's economy, riding the country's 143% inflation rate to a presidential election victory. Milei can now act on his campaign pledges, including swapping the peso for the US dollar, shutting the central bank, and making drastic public spending cuts. Damien Sasser of Bloomberg Intelligence joins us now for more. Damien, what's the first move going to be?
Well, I mean, first he's got to, basically create a cabinet. So we're going to be watching very closely to see who he's affiliating himself with. Obviously, he was supported by Mauricio Macri, Patricia Bullrich, and some others. But I mean, Jonathan, he's burning down the BCRA, the Banco Central de la República Argentina. That's not going to happen. I mean, the country has negative net international reserves. There's just not enough dollars in the economy for, the country to dollarize overnight in the way you would think it would, like in El Salvador and Ecuador, or even in Zimbabwe, other dollarized economies. I think the closest comp you're going to look at is Peru. They've been kind of dollarizing for the better part of the last 30 years, going back to the late 90s. It doesn't happen overnight, Jonathan.
Damien, you and I are on the same page. Let's go back a few years, back to 2018. Macri, who the establishment seems to love. New regime, new era for Argentina. They issue a century bond. What happens a few days later? Bang, same story. Why is a radical approach not the right approach for Argentina?
Well, it's really just about, I mean, look, I mean, a radical approach might actually work, Jonathan. I'm not saying it won't, but I mean, certainly economists know a lot more than me. Amandito Fraga, who is Soros's boots on the ground in Brazil, is opposed to it. Others like the former central bank governor of Mexico, the former, one of the former central bank governors in Chile, have all railed against, Javier Milei's plan to burn down the BCRA, to dollarize the economy. But at the end of the day, what they'd be losing is autonomy over their monetary policy, autonomy over their FX policies. So in an emergency, Jonathan, of which there have been plenty of in Argentina, they just won't have the ammunition to defend their economy. And I fear for what that means for boots on the ground, for people, for corporations who are involved there.
It's a story we're all following. Damien, you're going to be a busy guy on this story, no doubt, for the next few months. Damien Sassad there of Bloomberg Intelligence. Back with us for some final thoughts. Russ Kostrick, Brian Weinstein. Russ, try putting together a view on EM next year. Never mind what's going to happen with China. Do you have to do it ex-Argentina because it's so confusing right now?
Well, I think EM is actually interesting. And one thing that's worth keeping in mind is the EM, for the most part, was ahead of the G7, the developed world, in terms of the monetary cycle. So if you have an environment where inflation's coming down, EM countries actually have the latitude to lower rates, and we're no longer getting that headwind from the dollar, we could see a constructive environment for EM assets in 2024.
Brian, these were some of the original front loaders, The Fed likes to call itself a front loader. It wasn't. EM got out before. Are we going to ride that wave next year?
Listen, this was supposed to be the year of the bond, right? And it was going to be led by the high real yields, which were the broadly the emerging markets. There's always specific issues. It hasn't panned out that way. I think Russ is right. You need a weaker dollar, but the conditions for emerging markets to do well are there. I think we need the Fed to be legitimately done. I think if they could be a little bit more clear on what they were looking at, that would help a lot. I think a lot of money is staying in the dollar at these yield levels with the uncertainty. But if that changes, I do think emerging markets broadly are set up pretty well given their levels of yields.
Brian, a lot of money staying in cash. And this is your line, your words. Cash won't make you rich, but it pays the bills. I want to discuss this with you both. If I wake up in 12 months' time and revisit that view, looking back 1 year, am I happy I've got dry powder or upset I didn't lock in what's available at the long end right now?
I mean, my view would be a little bit of both. So I think when you get 10-year notes down here below 450, you're finding cash, right? They can rally a bit more. But I do like where we were, and I was vocal about this before the rally. When you do get that above 5% 10-year note, you're supposed to move out the yield curve. It may not be the top. It's very hard to call. But I do think we're in an environment where, listen, equities are kind of unchanged for the last 2 years. If you can build good income, no matter where you find it, I think that's a win. And you're supposed to be moving out of cash into these situations when opportunity arises, and you'll never get it exactly right. So cash is fine, but over a year, you want to be moving out.
Russ, what is the opportunity cost of staying in cash?
The opportunity cost is right now you can build a portfolio with spread products that can yield 6.5%, 7.5%. I think equity is going to have a decent year next year when you get away from the Magnificent Seven. Valuations actually are not that stretched. They're even cheaper outside the U.S. So, yes, I mean, cash is yielding 5.5%, but it's not crazy in a multi-asset portfolio of stocks and bonds to get high single digits, maybe even double digits next year. So, again, I don't think you have to rush out today, but starting to put that money to work, not hiding out in cash indefinitely, I think that's the way you go.
Russ, given your conversations you have with clients every day, how sticky is that money in money market funds?
It is very sticky. It's a great point. And again, you get it. It's been a very long time. I mean, arguably, well, more than a decade since you could sit out on the sidelines and get 5.5%. But again, at some point in 24, maybe the back half, the Fed is going to start to cut. We still have inflation running at, pick your number, certainly over 3%. So having a portfolio that's getting better than 5, I think over the long term is important.
That's what I want to finish on, Brian. What breaks the wall of that money market dam?
Normally it's people miss it and get nervous and then move out after the fact. I think that's probably the right answer here. It's just so tempting, and people are just paralyzed, right? Equities don't look cheap on a historic basis. As we said, the long bond doesn't look cheap on a relative basis. So I don't know that there's a single catalyst. Again, I guess the easy one would be the Fed said we're definitely done, and based on the metrics we're going to ease, you'd get a panic rush out of cash. At that point, it would probably be too late, but you would certainly get it.
Based on the Fed speak we've had over the last couple of weeks, they're not prepared to do that anytime soon. Russ Kostrick, Brian Weinstein, gents, thank you. You can see why a lot of people are paralyzed sitting in cash. To Russ's point, why that money is so sticky, because the narrative in this market seems to change from day to day, no longer week to week, month to month. I mentioned this a little bit earlier this morning. Think about how 2023 started. January was soft landing, maybe a recession, meh. February was no landing. March was banks collapsing, hard landing. And here we were in Q3 talking about GDP close to 5%. Tuesday, CPI, small downside surprise, soft landing hopes and dreams. A few days later, we're talking about deflation at Walmart and the prospect of recession. I can't keep up, and I imagine you can't either. Coming up, the morning calls, and later, UBS's Nadia Lovell expecting big tech and energy stocks to outperform next year. That conversation shortly. Your equity market right now on the S&P 500, just about unchanged. Your opening bell, 7 minutes away.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic, because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why, part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Through the noise. Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
So we are about 5 minutes away from the opening bell. 4-day winning streak on the S&P 500. Attempted to make it 5. We're just about unchanged looking at the equity market futures on the S&P. Let's start with the price action. Let's get you some morning calls. First up, your first call from Bank of America, upgrading Penn Entertainment to buy, expecting shares to benefit from its new gambling app, ESPN Bet. Your second call from Deutsche Bank, upgrading Boeing to buy, saying deliveries are starting to accelerate. That stock is up by 1.3% in the pre-market at 210.70. And finally, Evercore, reiterating its outperform rating on Microsoft, describing the Sam Altman hiring as a clear win for the company. That stock is up just a little bit, well off session highs. We're positive by 0.1% going into the opening bell. Coming up, higher stocks, lower yields. That's the outlook from UBS's Nadia Lovell. She joins us around the opening bell next. 4 minutes away from that open, your opening bell is just around the corner.
that's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Like, please, like, really actually tune in. I desperately need an audience.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg. Context changes everything.
DOJ or other authorities
Could face bigger challenges.
It was going to keep Real World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Okay, let's get your trading week started. 24 seconds away from the opening bow this morning. Good morning. 3-week winning streak on the S&P 500. Believe it or not, the longest weekly winning streak going back to July. It's been that rocky over the last few months. Equity futures right now going into the opening bow totally unchanged on the S&P. There's your open, switch up the board and get to the bond market. Last week, yields aggressively lower by more than 20 basis points. Starting the week at the lowest level since September on a 10-year. Yields higher by 3 basis points right now. Your 10-year 4.4686. So the FX market, one thing sticks. Dollar weakness. The euro 109.24. Last week for the dollar index, the worst week since July. In the FX market right now, 109.23. That currency pair positive by 0.1%. And looking at crude at the moment, up 1.8%, $77. And I think we could call it 30 cents. About 30 seconds into the session, we look like this. We're negative 0.05% on the S&P, going nowhere. The Nasdaq just a touch positive. One stock to watch at the open is Microsoft. Shares flirting with another record high after hiring OpenAI co-founders Sam Altman and Greg Brockman to lead their new AI team. Evercore calling the developments, quote, a clear win for Microsoft and its investors. Ed Ludlow's been trying to follow this story all weekend. Morning, Ed.
Yeah, good morning, Jonathan. Well, in the first instance, Microsoft is up a percentage point, as you say, flirting with that fresh record high. Actually, the latest is much more complicated than Sam Altman and Greg Brockman going to Microsoft to lead a new AI unit. That happened late last night. The kind of last domino was Satya Nadella taking to X, the platform formerly known as Twitter, to post that Microsoft still backs its relationship with OpenAI, but Altman and Brockman, who had been the chairman of OpenAI's board before Sam Altman was fired on Friday, would be joining them in this new unit. The latest is actually that around 2/3 of the remaining OpenAI staff have signed a letter to the board, which we at Bloomberg have just reviewed, and they're saying to the board that they need to reflect on how they've acted, and almost 500 of those employees are threatening to resign and walk away if the board doesn't engage with them. I guess the inference that we read into this is that the door is still open if OpenAI employees would have it for Sam Altman to go back to OpenAI. And remember, that was the crux of the whole weekend. The efforts of OpenAI's interim executive team, key investors like Thrive Capital and Sequoia, trying to put pressure on the board to bring Sam Altman back. It didn't happen, and what happened is Emmett Shear, who's the former Twitch CEO, was put in place as interim OpenAI CEO. 32 minutes past the hour, Microsoft up 1.2%. That's everything I know right now.
What a needlessly messy weekend for a lot of people involved in all of this. Ed, stick around, stay close. We're going to dig deeper into this story in about 10, 15 minutes' time. Let's stick with tech. NVIDIA and Alphabet are partnering together to help develop technology to find new materials for medicine. Abby has more. Hey, Abby.
Hey, John. Yes, this is an interesting story. Not a lot of reaction for the stocks right now, but NVIDIA is partnering with Alphabet on Alphabet's drug tech spinoff called Sandbox AQ. It helps companies simulate large volumes of chemical reactions to develop new materials for medicine and, interestingly enough, batteries. Now, the startup will help expand the capabilities of NVIDIA's software platform for developing AI applications to better simulate quantum mechanics behind chemical, biological, and material science. It's valued at about $4 billion. It does rely on quantum algorithms, which have been around for a long time, but they're too complex to run on computers. NVIDIA chips make it possible. And of course, as you were talking earlier with our guests, NVIDIA does report tomorrow, so that's another piece of news. Big moves for the last two reports. They've put blown out numbers and guides. Yeah, will that be the case again?
You think about what happened in May, just huge for this broader market. I've talked about it a couple of times already this morning. And Abby, by the way, thank you. For the economy, you look to jobless claims. For the market, you look to numbers from NVIDIA coming up in the next 24 hours. We mentioned healthcare and pharma. Let's stick there. Shares of Bristol Myers under pressure today, falling in sympathy after major courtroom and drug development setbacks over at Bayer. Katie Greifeld has this one. Hey, Katie.
Yeah, some bad news for Bristol Myers coming out of Germany this morning, where chemical and drug giant Bayer had a big setback. The company halting a trial for its experimental cardiovascular drug due to a lack of efficacy. Now, obviously, that is bad news for Bayer, but it's also bad news for Bristol Myers Squibb. It has a similar experimental drug for treating atrial fibrillation, and there's a lot of investor focus around this specific issue because you think if successful, obviously this could address a huge market, generate huge sales. So even though not even their drug trial, you can see Bristol Myers down about almost 3% from the opening.
Katie, thank you. Just an update on Citi, just quickly. A headline crossing the Bloomberg in the last 30 minutes, eliminating more than 300 senior manager roles as part of Jane Fraser's big efforts to simplify the Wall Street giant. That number amounts to roughly 10% of the workers at that level, according to a person familiar with the matter. So all of that coming out this morning. Much more on that a little bit later. Nadia Lovell of UBS weighing in on the path ahead, writing, quote, "The market is likely to take a breather after the strong rally over the last couple of weeks, but the trend is higher." Nadia Lovell of UBS Global Wealth Management joins us now for more. Nadia, always wonderful to catch up with you and get you on the program with us. Your year-end price target for next year is 4,700. Yet I go through the body of your work and you acknowledge that we're getting this earnings recovery. Can you help us all understand why you identify an earnings recovery but anticipate limited upside in the equity market?
You know, I think a lot of this has to do with just how quickly the market has recovered after pulling back in late summer. And so that's why there's limited upside to our price target at this level. But, you know, we could eventually see the market even go through our price target if we do see that come in better than we expect. A lot of this is going to depend on the labor market and where that's going. I mean, last week we did see some weakness in terms of some softening in the labor market when you look at the continuance claims data hitting a two-year high. So that's something that's bear watching. And so we'll be watching that closely to just give a read-through on how the consumer is doing. But if the economy remains strong, there could be even further upside to our 4,700. But right now, we're sort of in a wait-and-see mode, just given after the strong rally that we've had.
And Nadia, given how much the narrative has switched one way to the next, flipped back and forth, this feels really like, for the moment at least, for many, low confidence, low conviction stuff. When it comes to your confidence levels for next year, do you have more confidence that yields fall from here or more confidence that stocks rally?
I think it is that yields falls from here. We do maintain a preference of bonds slightly over equities. And a lot of this, again, having to do with the fact that we do expect the economy to soften from here. We're not looking for a recession, but we do expect a period of subtrend economic growth. And that will help put the Fed in a position to cut. And we know historically, once the Fed starts to cut, that bond yields tend to fall. We've already seen bond yields pull back over 50 basis points on the long end of the curve, just indication that the Fed is likely done hiking. And so once we shift and pivot towards a cut, we expect to see bond yields fall further. We're looking for the yield on the 10-year Treasury to get to 3.5% by the time we get to the end of next year.
So 3 cuts next year, 3.75 on a US 10-year. Given all of that, let's shape your equity view. Given what you expect in fixed income and from the Federal Reserve, why the lack of love for utilities and for real estate, Nadia? Why that?
You know, it's not just about rates for utilities and real estate. Again, like I said, those tend to be more, particularly utilities, tend to be very defensive. And while we have some defensive exposure through consumer staples, we don't necessarily want to lean fully into defensive because we do expect a soft landing. I think also fundamentally, there's a lot of regulatory headwinds within utilities. And also the reality is that, you know, policy is likely to remain restrictive, even though we're past the bond yields. And so that's going to be a headwind for utilities that tends to be more leverage. Also within real estate, from a fundamental standpoint, there's still parts of real estate that might have over-earned in the pandemic, including storage. There's also some concerns from the industrial standpoint in terms of utilities of potential weakness of demand in that area. And then you also have carrier spending that has been declining recently, just given the higher interest rate environment. And so that's putting some pressures on some of the tower stocks. And then, of course, we all know there's continues to be concern in terms of commercial real estate, specifically office. And so that's why we're a little bit more cautious still on utilities and real estate.
Let's get to something I know you're less cautious on, tech. The year-to-date gains, Nadia, have been phenomenal. NVIDIA up by something like 240%, Meta up by 180%. I had briefly on the Bloomberg a moment ago, Microsoft back at another all-time high. Nadia, do you believe that some of this can continue into next year?
Yes, we think some of the winners from this year will continue to move higher. Some of these companies are still in the midst of an earnings upgrade cycle. Of course, some of this being driven by AI implementation and monetization. But I would say even within tech, we remain very focused on high quality. So those companies have top line, good margins, free cash flow generation, and return on invested capital. And when we look across tech, a lot of those companies tend to fall into software. So I would say strategically, we continue to lean into software as a lot of these companies have, you know, subscription-based business models now, high level of recurring revenues. But we would complement that with some of, from a tactical standpoint, some of the high-quality semis that where we think the end market are bottoming or inflecting, like PC softwares and servers, and of course sprinkle in a little bit of AI exposure into that as well.
Can we finish on AI? Nadia, I had this conversation with your colleague Mark Haefele over at UBS a little bit earlier this morning. The difference is now between this frenzy and the frenzy around the internet and the dot-com boom. Nadia, you can see that really reflected at the moment over the weekend. There is a near obsession with developments in this space with Sam Altman and OpenAI over the weekend and again this morning. Nadia, what's the difference between now and what was taking place in the late 90s, early 2000s?
Well, you're already seeing monetization happening, and reality is like this has a lot of legs. And so we think over the longer term, there's a lot of opportunity in AI. A lot of it we think is going to come from the implementation standpoint. I mean, we just continue to think that you're going to see a market that is going to be growing at 60% plus CAGR over the next 5 years. And we do think that is transformative to the way we approach businesses and so forth going forward. So we think that this is very different. These are a lot. And also you have large players in this market. Before doing the tech.com bubble, you really didn't see as many large players in the market. A lot of it it was concentrated in mid and small cap areas. And now you're seeing companies that really have a lot of free cash flow generation behind them that's really putting that to work to drive growth in AI. And so we think that's the key difference in terms of the quality of the companies that are now involved in this.
Nadia, thank you. Nadia Lovell, one of the best over at UBS. The outlook looks like this for Nadia and the team. 4,700 year end on the S&P. Not this year, but next year. Looking for 3 rate cuts from the Federal Reserve, looking for a 10-year to get back down to about 375. The scores at the moment in the bond market, your 10-year currently higher by 3 basis points at about 447. 30-year up by a couple of basis points as well, back through 460 on a 2-year, 490.45, up by about 2 basis points there. The broader equity market positive by 0.2% on the S&P. Outperformance on the NASDAQ up by about 0.5%. Still looking at Microsoft in and around all-time highs. Coming up on this program, a weekend of drama at OpenAI.
How would you describe your relationship with Satya Nadella? How much control they have?
Company's not for sale. I don't know how to be more clear than that.
Microsoft CEO coming to Sam Altman's rescue. That conversation up next.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
From the world of politics
We're not going to be relying upon countries whose values we don't share.
to the world of business.
It's all about corporate power.
Balance of Power. Live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
I'm a conservative, but I'm not in a bad mood about it. Fellow
Who's in a bad mood about being conservative? Is that because you feel like populism has taken control of your party?
And Joe Matthew.
What is it about race that bothers you about the new chairman of the Joint Chiefs?
Our military is becoming so political that we're going to go south when it comes to readiness.
Alongside Kaylee
The
Lyons.
door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience would get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power. Every weekday at 5 p.m. Eastern. Only on Bloomberg. Context changes everything.
How would you describe your relationship with Satya Nadella? How much control they have? You know, I've heard people say, you know, Microsoft's just going to buy OpenAI. You're just making big tech bigger.
Company's not for sale. I don't know how to be more clear than that. We have a great relationship with them. I think it's that these like big major partnerships between tech companies usually don't work. This is an example of it working really well.
Amazing just to rewatch that exchange with the former OpenAI CEO, Sam Altman, earlier this year on his relationship with Microsoft, sitting down with Emily Chang. One pricey game of musical chairs later, Microsoft announcing Altman and his co-founder, Greg Brockman, will join the company. The CEO saying this: "We're extremely excited to share the news that Sam Altman and Greg Brockman, together with colleagues, will be joining Microsoft to lead a new advanced AI research team." The announcement on the heels of a frantic weekend in Silicon Valley following the aftermath of Altman's firing. Your team coverage starts right now. Ed Ludlow back with us on the West Coast in San Francisco. Mandeep Singh here in New York City. Ed, what is the latest and how many questions do you still have that simply have not been answered this weekend?
Well, the latest is that 2/3 of OpenAI's staff are threatening to resign and go and work with Microsoft if the board does not resign. And remember, the board is made of just 4 people. And they really dug in over the weekend. You know, everyone was expecting right up until late yesterday evening that Sam Altman would come back. What I'm told by sources is that actually the board was vetting candidates as an interim CEO starting Saturday night. They weren't even engaging with Sam Altman's camp. And then we got the news that Emmett Shear is coming out. I know we don't talk about it as much on this program, John, but the big question for me is what happens in the private markets. There is a big tender offer that is on hold right now. And this, on Friday, was a very liquid secondary market for private shares of OpenAI that slammed shut the moment that Sam Altman was fired. And it's left a lot of investors hanging.
Well, I asked Mandeep Singh that question this morning. Mandeep, if this was a stock trading in public markets, what would it be down by? Mandeep, you said 50%. Would it be that bad?
I think so. Look, I mean, for a company that's valued at around $86 billion in the private market and doesn't have a lot of revenues to show, it's all driven by, you know, narrative and hope. And this definitely shows the friction that is within the company. And look, with a technology like AI, you constantly have to be ahead. You have to develop that ecosystem. And if your engineers are leaving or you're breaking apart the company, that's not good for the ecosystem.
Mandeep, for Microsoft, you know the commentary all morning. Dan Ives, Wedbush, Nadella played chess, Evercore, clear win for the company. You don't share that view, do you, Mandeep? Why?
Well, so think of it this way. Even if Sam Altman, you know, develops an alternative or, you know, develops their own large language model, what it would show is you can replicate a large language, foundational large language model within 6 months to a year. And if the only choice is to buy OpenAI and they have to get, you know, the remainder of the 51%, you're talking about a $80 billion acquisition with no revenue to show. That puts more pressure on Microsoft. So I really don't see how it's good for Microsoft here.
So Ed, let's go back to that Emily Chang conversation. Let's take Sam out and put Emmett in. If Emmett's answering that question today, is the answer different? Are they for sale?
The answer is different in the sense that Emmett is more philosophically aligned with the board. What I heard from sources is the reason he was appointed is that he shares a recognition that AI poses an existential risk, right? Effective altruism. Sam was a product guy. And just one quick thing on what Mandeep said, you know, what we're seeing play out is key man risk. It's this idea that OpenAI's value is entirely tied up in the intellectual capital of Sam and Greg Brockman. Lots of sources put an emphasis on Greg Brockman, and now you have 490 to 500 other people threatening to resign. Is it for sale? Well, go back and look at the post he made last night. He outlined a very long letter of what he plans to do, and the first bullet point was to hire an investigator to find out how Sam Altman was fired in the first place. What I'm hearing is this ain't the end of the story. Things could change an hour from now. Sam Altman at Microsoft, I think there's still impetus to get Sam Altman back at OpenAI.
Okay, let me ask you this, Mandeep. What's more likely, that Sam goes back to OpenAI or Microsoft buys it?
I think the latter, simply because OpenAI is sort of disintegrated right now, and once something like this happens in the market, it's very hard to bring it all back together in that old state. So my bet would be Microsoft would be a willing buyer, although it would pose regulatory concerns, and I can't imagine how regulators would let that happen.
Mandeep Singh, Ed Ludlow, to the two of you, just brilliant. Looking forward to the coverage on Bloomberg Technology a little bit later, led by Caroline Hyde together with Ed Ludlow. That conversation a few hours away. The conversation in the market, we're positive by 0.2% on the S&P 500. On the NASDAQ, up by 0.5. Microsoft is doing okay. We're talking about all-time highs for that name once again. In the bond market, yields are higher across the curve, 2-year out to 30-year, by a basis point or two. And in the FX market, the dollar just a touch weaker against the euro. Just seeing the euro back at 109, kind of surprising. The euro against the dollar, 109.40. Let's get you some sector price action. Here's Abby.
Sticking with Microsoft, John, it is really shaping the sector composition this morning. Not surprisingly, technology is the best sector on the day, up about 0.75%, helped out in a big way by Microsoft's all-time high. On the bottom, though, take a look at utilities, consumer staples, and real estate. This is, we do have yields backing up just a little bit. Utilities down down the most, down 1%. Of course, those dividends look less attractive. And that conversation that you had with Nadia Lovell, so interesting. Let's take a look at what you guys were talking about, because it's very, very dramatic. On the year, take a look at tech and communication services. Unbelievable gains, up 50%. On the other hand, take a look at real estate and utilities. Again, because on the year, yields are higher, those dividends look less attractive. Well, those are the big laggards sector-wise this year, John.
Abby, thank you. Appreciate the update. Coming up on the program, I'll give you a sneak peek of a very condensed week. The Trading Diary, up next.
The acceptance of Purosangue has been extraordinarily high. We had to stop the order for a while because we had to understand how to manage the supply chain. So there is a strong traction of Purosangue all over the world.
How much do you worry about increasing production and therefore becoming, I guess, less high-end luxury?
We are making 13,000, 14,000 cars per year. We will not grow a lot in the future because we want to grow more for value, not for volume. And maybe one number, you know how many cars Ferrari did we put on the road since the beginning, since the first one? 250, 260,000. So 250,000 cars in a market where there are million and million of cars every year.
This is Bloomberg.
25 minutes into the session, a 4-day winning streak on the S&P 500 becomes 5 on the S&P 500. A 3-week winning streak could become 4. Early days, I know. We're positive this Monday morning by 0.2%. You close out with a 4th week of gains, though. Longest weekly winning streak going back to June. So far, the longest weekly winning streak going back to July. That's some of the price action. Let's get to that condensed trading week. Your trading diary looks a little something like this. Coming up on Tuesday, we'll get the FOMC minutes plus earnings from NVIDIA, Nordstrom, Lowe's, and a whole lot more. On Wednesday, jobless claims and durable goods. Just sit on jobless claims a little bit longer. This, for me, is the data point of the week, and I'll tell you why. Claims have been inflected higher from exceptionally low levels now for a few weeks. We've all got to ask ourselves, what is the difference between a welcome loosening of labour market conditions and an unwelcome deterioration of this labour market, which might send this equity market in a different direction to bonds? That's one to watch on Wednesday. On Thursday, enjoy yourself. US markets closed for Thanksgiving, and of course on Friday, markets closed early for Black Friday shopping. From New York City, that does it for me. Thank you very much for choosing Bloomberg TV. Good luck for the rest of the trading day. This was the countdown to the open. This is Bloomberg.
this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
So we get to ride in an Uber with the Uber CEO.
Yeah, that'd be pretty cool.
Come along with me, Emily Chang, as I ask tech leaders of today what makes their businesses future ready for tomorrow.
You're an expert.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong? Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. OpenAI, we are going to get very smart very quickly this morning. We got a couple of roundtables here that's going to really break down this situation and look at it just in terms of reporting what's going on and maybe some of the key angles that folks need to be aware of. So we're going to have a couple of good roundtables coming up. Plus, we're also going to check in with Nancy Curtin, partner and global CIO for investment advisory at Alt-I, to give her her thoughts on these markets. So we're going to talk a lot of OpenAI right here, and we're going to talk markets as well. We've got a little bit of green on the screen there, so starting the week off with a positive tone in the marketplace. Let's kick things off right now with John Tucker.
All right, let's start with the most actively traded stock, Microsoft, climbing after the software giant hired co-founders Sam Altman and Greg Brockman from OpenAI to lead their new in-house advanced artificial intelligence research team. So that's helping push the S&P 500 higher after its third straight week of gains last week. Meantime, Phil Orlando at Federated Global remains bullish of equities at this point.
We're all in on this equity rally. We thought that at 4,100, I guess about a month ago, the Federal Reserve is done in terms of raising interest rates. They're on hold. They're going to be on hold till the back half of next year.
And earnings season that hasn't wrapped up just yet. NVIDIA's quarterly results could still exceed investor expectations thanks to strong demand from generative AI. Best Buy, Nordstrom, Lowe's, they're set to post slumping sales. As far as treasuries right now, the 10-year yield up 2 basis points at 4.45. S&P 500 12 points higher. That's up 0.3%. We're at 45.26 on the index. The Dow Jones Industrial Average 60 points higher. That's up 0.2%. And the Nasdaq 100 right now 99 points higher. That is up 0.6%. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Good to see you, Matt.
It's good to be here, kind of, you know.
We were done with you on Friday.
I got to say something. My wife told me at the very beginning, she said, don't tell anybody our due date.
Okay.
And I was like, why? Let's share the news, you know? Why are you so... But she was like, no, you don't understand. In this day and age, and she's younger than I am, of social media and like instant messaging, well, that's not my age, texting, you know, WhatsApps, we're gonna be overloaded if you do that. But I still told everybody we're gonna have a baby November 20th, right? And I've gotten about 7,000 text messages. Hey, you got a baby yet? Hey, no baby yet? And it gets super annoying.
So the bottom line is you do not have...
I do not have a baby yet. And
okay,
here's
there
the
we
deal.
go.
When we have a baby, I will tell you.
Exactly.
Or you won't be here.
Or you won't be here, and that'll tell us. All right, but for right now, Matt Miller's here. Paul Sweeney here. We're live in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well. And now Bloomberg is now in your dashboard. Apple CarPlay and Android Auto. It gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. How do you get it? Well, it's free to start with the latest version of the Bloomberg Business app. That's the Bloomberg Business app. Get it on your iPhone or on your Android phone in the Apple App Store or on Google Play. Just download the app, connect your phone to the car, and get started. And it's all presented by our sponsor, Interactive Brokers. All right, we got some green on the screen. We got Bailey Lipschultz here in our Bloomberg Interactive Broker studio. Bailey, what are you looking at?
Yeah, as JT mentioned, not only are we higher, but the NASDAQ 100 right now up 0.6% to the highest level since mid-January. So passing that July 31st closing high, which we had been tracking. Big drivers, Microsoft up 1.3%, ticker MSFT. Apple, Meta, NVIDIA up 1%, ticker NVDA, ahead of earnings tomorrow. So big tech back in vogue and seeing kind of that divide between haves and have-nots. Biggest dragger, Tesla down 0.5%. But this coming really Microsoft rallying after news of that shocking, surprising exit, ousting of Sam Altman from OpenAI, now getting hired by Microsoft. So if you're not going to be employed by the company that you're funding, you might as well bring them in-house, and that does seem to be the case with analysts.
I can't believe it's only up 1.3%, Microsoft, because basically Ilya Sutskever and the OpenAI board made it possible for Microsoft not to have to even contemplate buying OpenAI.
Yeah.
They're just going to take it.
And then we saw the report that a little over 500 of the 700 employees at OpenAI basically said, if you don't bring Altman back, we're going to join him at Microsoft.
Exactly.
So,
exactly. But now Microsoft has hired Altman.
Yeah.
And Brockman. And maybe they'll hire the other 500 employees. So then who needs to buy OpenAI? Does it even need an $86 billion valuation or an $8.6 billion valuation or an $860 million valuation? Like,
but still,
now Microsoft can just have it.
But Microsoft has invested $13 billion in that entity. What do you do with that investment on your balance sheet?
Write it down to zero.
There you go.
That's exactly what I was going to go to. You know, it ends up being addition by subtraction and addition by addition for Microsoft. They're one company that's underperforming.
Scratching my head over here.
Well, you know, you write down, then that's a bump for your balance sheet, and then you hire Altman.
They make a lot of money.
Let's see.
Yeah, exactly. One of the stocks that's trading lower, Bristol Myers, ticker BMY, as is its partner 270, which is a very small company, TSVT. This coming after a drug being developed by the two will be the FDA is going to convene an advisory panel and scrapping a decision date for December 16th, basically saying they want to see more data. So Bristol Myers among the worst performers in the S&P 500. This also coming as Bayer, which is plunging in European trading, stopped a trial of a competing drug. Key thing is Bristol's developing a drug that operates similarly, so that's another negative for the company. So kind of double bad news hitting what once was one of the bigger biopharma companies, but now still at $100 billion. But if you look at the performance on a 12-month basis, down 37%, so not quite what it once was, given all investors really want to buy these days are Alzheimer's and obesity drug developers. One other company that's under pressure, Sphere Entertainment, ticker SPHR, down 4.1%.
Wait, the Sphere?
Sphere, the company
they own the Sphere in Las Vegas?
Yep, and the reason that they are trading down is, according to a Sky News reporter, London Mayor is blocking their application for MSG Sphere in London. So bringing the Spheres from Vegas to London. That's according to a Sky News tweet. That's why you're seeing Sphere shares down 4.1%. This was spun out of and separated from MSG.
God, why would they do that? It's been such a
It's a horrible move. And here's my forecast. So the mayor of London,
according to Sky, the reason why application was blocked on worries of excessive light pollution. This is all according to Sky News, but yeah.
So here's what's going to happen over the next couple of days, right? There's going to be a letter from the residents of London saying, we will move to Las Vegas if you do not accept the Sphere. I mean, that is the coolest thing in Las Vegas.
And London's got this big Ferris wheel thing.
The Eye. That is the Eye. I mean, I once had my birthday party on the Eye. I rented out one of those little cars.
Yeah.
And I had like 20 people, and they put a bar in there. We served Pim's cups, and we just went around and around and around and drank.
If I could ask,
it was awesome.
How much was that?
I don't remember, but it wasn't prohibitively expensive because it was my 30th birthday. I was, just a young kid, had just moved to London, and it was a very cool way to celebrate.
It's pretty sweet.
Yeah.
All right, good stuff.
But I would rather have done it in the Sphere.
Yeah. I'm dying to go out there and check that out.
Me too. Me too.
I mean, what was your impression? Any impressions from the F1 race?
I thought it looked amazing. I mean, I really regret not going to the F1 race. I previously haven't cared as much because I just, I remember F1 when they had V12s and it was way better. I don't even know what they're using, like 2-liter 4-cylinders now. It sounds worse than the electric race, but I still would have liked to go and see the spectacle and a street race in the city. Just looked awesome.
All right, very good. Bailey Lipschultz, thanks so much for joining us here. Bailey Lipschultz, Bloomberg News. All right, OpenAI. This is the story of the morning. I'm going to assume most people have kind of seen the news. Right now, it looks like Microsoft might be a little bit of a winner here. So we're going to roundtable this thing. Ed Ludlow, he's host of Bloomberg Technology. And Mandeep Singh, he's our senior technology analyst for Bloomberg Intelligence. So Mandeep, at this stage, and it's still a very fluid situation, I'm not even sure where the employees are going from OpenAI, whether they're staying at the existing thing or whether they're going to go over to Microsoft. I'm not even sure where Sam Altman is, but it appears that Microsoft...
Dude, he got hired by Microsoft.
Well, yeah, we'll see. I'm waiting to see like triple confirmation there.
Satya Nadella confirmed it. He's the CEO of Microsoft.
He could be going, I don't know where these guys... It's Silicon Valley. The kids don't know what they're doing. Mandeep, it seems like it's a win-win-win for Microsoft here. What's your take?
Actually, we sort of disagree with that consensus view that it is a win for Microsoft, simply because, when you are acquiring talent like this, it's not the best way to, build a new product. And in this case, the IP still remains with OpenAI.